sir.
Hello. Yeah.
Audible, sir.
Yeah. Good evening, my dear friends and students. On behalf of Bengaluru branch of SIRC of ICI, and also on behalf of Southern India CA Students Association, it's our great pleasure to organize 4 days mega workshop on bank branch audit starting from today. Friends, for this program in particular, why this bank branch audit for 4 days may be a question. Actually, earlier we used to have only 1 day workshop or 1 day seminar on bank branch audit. But this year, our beloved chairman, CA Shetty, wanted to make it as 4 days detailed workshop, keeping in mind certain objectives. Say, for example, if I talk about dosa, who does not know dosa in Bangalore, right? Everybody knows dosa. But if you go to the next level, the question comes up, which dosa? Is it masala dosa, or rava dosa, or ragi dosa? You know, there are certain many varieties of dosa. If you go into the nitty-gritties, each dosa has got different features, taste, and also the method adopted in preparing that. Similarly, the moment we talk about audit, who does not know audit? But very important thing is, when it comes to the next level, which audit? Is it bank audit, bank branch audit, or the central statutory audit, or this a corporate audit under the Companies Act? You know, depending upon the different natures of the audit, the requirements will change, the checklist change, the features will change, the objectives will change, everything will change, right? Therefore, when it comes to the bank branch audit in the today's scenario, we felt it is important for us to get into the nitty-gritties and give attention to the minute details to be taken care as part of this audit, so that we will be able to deliver quality audits today. With that in mind, 4 days detailed workshop is organized by the branch and jointly with the SICASA today. To conduct this program, co-opted member of SICASA, CA Manjunath Allur, has put a lot of efforts. And today's speaker, the first speaker is CA Cotha S Srinivas, the past chairman of Bengaluru branch and also the past chairman of Southern India Regional Council, is one of the well-known speaker also. And on behalf of the Bengaluru branch and also on behalf of SICASA and the members, students present here, I extend warm welcome to CA Cotha S Srinivas. Srinivas sir, warm welcome to you, sir.
Thank you, Shriram bhai.
Yeah, similarly, you know, Manjunath Allur is a chartered accountant, and he has been involved personally in conducting the SICASA students programs, including the designing and structuring the programs, and also selecting the speakers and the topics and things like that, and a lot of effort has gone into it. Manjunath Allur is instrumental for today's program on behalf of Bengaluru branch and also on behalf of all the students here. I extend welcome to Manjunath Allur, sir.
Thank you so much, sir.
Yeah. So similarly, friends, any program that we conduct, we also should thank all the technical team who have been extending extensive cooperation and support to conduct these programs in a smooth manner. And also I extend warm welcome to each one of you, the students who are the main reason for us to conduct this program. I'm sure this online program as a detailed workshop is supposed to derive a lot of knowledge and experience to all the students, and definitely this is something which is packaged with a lot of practical experience, because right from Cotha Srinivas and all other subsequent speakers, including Anand Krishna and Govind Shekhar, Venugopal, all other speakers are having rich experience in this field, and therefore this program is completely packaged with not only the theory of it, but it's more of a practical experience That's the reason this is going to be very effective program, and it is going to be highly helpful to all the students. I request each one of you to get benefited out of this program. And once again, I welcome each one of you. Thank you very much. And back to our Secretary, Doddan Gowda Patil, to take proceedings of the program. Thank you very much. Doddan Gowda, can you hear us?
Sir, Doddan Gowda is not a join, sir. Some issue is facing, some technical issue, network issue. He's trying to log into his mobile, sir.
Mr. Patil, can you hear?
But sir, I called, his sir is telling he is joined 2 minutes. Like.
Hello. Sir, are you able to log in and introduce? I think our secretary Doddan Gowda Patil has got some issue in logging in. Let us bear with him for a minute. Doddan Gowda, we can't hear you. Can you unmute? I think there is a problem in maybe some technical problem with Doddan Gowda Patil's system. May I request Manjunath Hallur to introduce CA Cotha S Srinivas, today's eminent speaker, please?
Yes, sir. It would be a pleasure. CA Cotha S Srinivas is a BCom graduate from Bangalore University and a fellow member of the Institute of Chartered Accountants of India, and also a member of the Institute of Cost and Works Accountants of India. He is a partner of SSB and Associates Chartered Accountants, Bengaluru. He has served in the institute for over 2 decades, 2.5 years as student committee member of SICASA Bangalore branch, 9 years as managing committee member of Bangalore branch of SIRCF ICAI, and 9 years as the regional council member of SIRCF ICAI. As a student committee member, he has served as a member and secretary of Students Association. During his tenure at Bangalore branch of SIRCF ICAI, he has served in all the positions. He was the chairman of Bangalore branch during 2009-10. During his chairmanship, he started distributing backpack bags to CA students, and for 25,000 students have been benefited by this initiative. During this year, the branch was adjudged the best branch of SIRC. As a regional council member, he has served from 2010 to 2019. He was the chairman of SIRC during the year 2017-18. CA Cotha S Srinivas sir, as a member of SIRC, has brought in many initiatives which include conducting ARRC, Annual Regional Residential Course on International Taxation, and is successful in conducting 5 ARRCs on international taxation. He organized regional level interstate cricket tournament for members. He was instrumental in collecting around rupees 1.5 crores towards CA Benevolent Fund in the year 2017-18. He conducted around 1,000 hours of CPE programs at SIRC during the year 2017, a first of its kind. He has organized 5 ARRCs during the year 2017 in the SIRC covering GST, international taxation, and Ind AS and corporate laws. He prepared concept paper on coaching classes as chairman of academic advisory group. He was instrumental in developing for SIRC. Improvised IVR system for members and students is made available in 6 languages. Infrastructure development at SIRC was undertaken. Presented papers, various study circle meetings, workshops, seminars, and conferences on the topics covering direct tax and international taxation. He is a visiting faculty at ICI Bangalore. Authored a book named CA Referencer for Chartered Accountants, which was released by Bangalore branch of ICI as Study Circle series booklet. He is a life member of Karnataka State Chartered Accountant Association, life member of Bombay Chartered Accountant Association, founder of Group Dynamics, a study group on international taxation at Bangalore and Chennai, and he is fondly known for Think Differently, Act Perfectly. With this brief introduction, I would like to present before you today's speaker, CA Cotha S Srinivas sir. Thank you.
Over to you, sir.
Thank you. So good evening, friends. First of all, let me thank my colleagues, the chairman of SICASA Bangalore branch, Shivaram Bhatt, and also the cooperative member Manjunath M. Hallur, who introduced me for the students over here. And also welcome each and every student who have participated in this video conferencing. Because of this pandemic, we are forced to do this video conferencing. Otherwise, it would have been a physical meeting where we could have attended, you people could have attended in the Bangalore branch and we could have addressed you directly. Now, before going into my presentation, let me share the presentation so that well, students, today we are discussing about, we are starting with this workshop, and as the chairman said, it's a 4 days workshop. And today we are talking about documentation, IRAC norms, and audit planning. Am I audible to all the participants? I request rest of the people to unmute yourself so that there should not be any disturbance. Hello, is it audible?
Yes,
Yes,
sir.
sir.
You are
Audible,
audible.
audible, sir.
Okay, okay, okay. So I think I request all of you to unmute so that whenever it is required, you can mute yourself. So today we are talking about documentation, IRAC norms, and audit planning. And tomorrow, I think we are talking about, they'll be discussing about LFR, and then one more speaker will be talking about how to verify the advances. And last day, member will be addressing about how to use Excel in doing the bank audit. When we talk about bank audit, basically it is in most of our offices, I should say more than 90% of our offices, it is not a regular feature that every day in and day out we do bank audit. Of course, now because of this concurrent audit and internal audit, few offices will be doing that on a regular basis. But majority of the offices, we won't do this bank audit, except this statutory audit where we do once in a year. And it's a great experience to all the article students to undertake this particular bank audit so that you will have some more exposure and a different type of learning, altogether a different type of learning. So there are various aspects in bank audit, and I'm sure that most of you may be doing this bank audit for the first time, or few of you would have done bank audit in the last year, and maybe second year or third year you may be doing it. But finally, it's your principals or your seniors in the offices who will be finalizing this bank audit. Now, from the students' perspective, I thought I will share with you a few of my thoughts and my experiences, because even I have started doing a bank audit from since 1992 when I was an article student. From that time, I've been doing a bank audit of branches. So whatever little experience I have over past 30 years, I thought I will share with all of you. What all the things we are going to discuss today? First, even though the title was Audit Planning, Documentation, IRAC Norms, I thought I will take audit planning at the end. First, let me complete with documentation, IRAC Norms. First, we will spend some time on banking industry, then get into the documentation, then I will take you through some of the basics of IRAC norms, and finally, I can share my experiences of audit planning with all of you. So banking industry, as you know, like money is considered as a lifeblood of the business. Banking industry is considered the backbone of any economy, as it is essential for sustainable social economic growth and financial stability in the economy as such. So without there being a banking facility, an economy cannot grow. So it is considered as a backbone of any economy. And today, you know, Indian economy is the fifth largest economy in the world, and with the $3 trillion, with the $3 trillion of GDP, we are expecting to grow to $5 trillion GDP, because you know that both our finance minister and the prime minister will be often telling that we are taking our economy to $5 trillion. And of course, it is bound to happen because of this pandemic. Maybe it may take a few more years to reach that particular position. When once we go to 5 trillion economy, we may be the third largest economy in the world. So for that, there should be a support. So for a support is banking industry. So without there being a very strong banking industry, an economy cannot grow. Now we're talking about the bank audit, and we also let us understand some of the types of banks that are there existing in our country as such. First one is a commercial bank. When I talk about commercial bank, basically it's all scheduled banks which comes into our picture immediately. All these nationalized banks which are working, like the main objective of banks initially was to accept deposits and lending advances. That is, you take deposits in the form of SB account, current account, fixed deposit, RD account, and then you make advances. That is, you give loans to the customers. That is the basic objective or a traditional banking business. So all these commercial banks have got this main business of accepting deposits and lending advances. Apart from this, they do various para banking services. So commercial banks, if I say, it's all what you call this, all the nationalized banks and all the scheduled banks in our country are considered as a commercial bank. Then we have this a regional rural bank. So when it comes to regional rural banks, even though this commercial banks, all these banks got nationalized in the year 1969 with the intention of serving the entire population, that is having their presence not only in the major cities but also in the rural areas. In spite of that, there is something called regional rural bank. This regional rural banks means we have banks which is helping the rural areas and concentrating on rural population. And almost we have around 40 regional rural banks in India, and every state will have one or two regional rural banks. Like we have in Karnataka, two regional rural banks. One is called as Karnataka Gramina Bank, and then Karnataka CA Gramina Bank. So this regional rural banks, the main objective of this is to help the rural population, and also work towards this primary sector. Primary sector meaning the agricultural loans or housing loans or MSME sector. So this regional rural banks basically concentrate on small and medium enterprises as well. Then we have another type of banks called cooperative banks. Cooperative banks, of course, it is, I think by this time you must be aware, you would have heard about cooperative banks, wherein it collects the membership. So there will be members, or they enroll themselves as a member. It's like a company. Cooperative bank is also like a company where there will be members. So they will get a share in a cooperative bank. There will be members. They come together and they will keep the advances. They will keep the deposit, and whoever wants the loan, the cooperative banks will give advances to those members. So cooperative banks works within a, I should say, within its members. So it collects deposits from the members and also lends advances or gives loans to the members of the cooperative bank. It has got a limited scope of working with respect to the cooperative banks as well. Then we have another type of banks called development banks, called term lending institutions. The main objective of development bank is not to do basic banking activities, but it also does the basic banking activity, but it is not, the initial purpose was not to deal with the end customer. This development bank used to do the finance to the other banks, like other commercial banks or regional rural banks. Some of the examples of development banks are like IDBI, Industrial Development Bank of India, or Industrial Finance Corporation of India, where they will select a particular sector to improve a particular industrial sector in a particular area. They will lend loans to the lead banks in a particular area, and in turn that banks will give loans to the industries in those areas. So it's called as a development bank. Then another type of bank is called as payment bank. Like payment banks, I will not tell you. If I tell one or two examples, you will understand what is payment banks. Payment bank, basically, it is not doing the traditional form of banking activities, like accepting deposits and lending loans. Of course, they have given some limit for accepting the deposits, maybe 1 lakh or 2 lakhs, or it keeps on changing over a period of time. The payment banks is basically helps you to make a digital payment as well. Like Paytm is one example. We have Airtel Payment Bank, Indian Post, Jio, NIDL, like that. Some 5 to 6 payment banks are there in India, where their main objective is to help the people to make payments, various digital payments for goods and services. The customers they're going to get it. Apart from this, we also have small finance banks. What is this small finance bank? The small finance bank also is similar to this commercial banks or regional rural banks, where they have certain limitations. It is not that they can go and lend huge advances, but they have a limitations where they help small timers, where they go and underserved or underprivileged or underserved people, where a particular set of people where the commercial banks are not lending loans to them. The small finance banks will concentrate on those areas and they start lending to those people. And they may also collect advances. It's not that they will not collect advances. They will collect advances and also, collect deposits and also lend loans to small and medium enterprises. It may be a very small part of the society that they will be working with. So small finance banks, few of the examples is Ujjivan Small Finance Bank. Then we have Janalakshmi Small Finance Bank. Like that, some 7 to 8 small finance banks are there presently in India, which will be catering to the needs of various people. Apart from this 6 type of banks, we also have Exim Bank and foreign banks. Foreign banks similar to the commercial banks, but not registered in India. It has come from outside, like Citibank, HSBC, Deutsche Bank, like that. And we have Exim Bank. So these are some of the types of banks that are there present in our economy assets. Then getting into the history of banking industry in India. Banking started in India in 18th century. So the first bank was Bank of Hindustan, which was there from 1770 to 1832. And then we had General Bank of India, which was started in 1786 and it was up to 1791. Then Reserve Bank of India was formed in the year 1935 and it is a central bank of our country which regulates the functioning of banking industry in India. So to control or regulate entire banking industry in India, we will have central bank. Every country will have a central bank, and in India we have a Reserve Bank of India as a central bank of our country, which regulates the functioning of banking industry in India. Then the Banking Regulation Act 1949 is there, which governs the financial statements of banks. And when we talk about audit of national banks, these are governed by Banking Regulation Act 1949, RBI Guidelines, and Companies Act 2013. So this is some of the very few things which I thought I'll share with all of you regarding the banking industry. So it's a what I should say, a precursor to get to know about banking industry. Then we will move on to the other aspects. So now we are talking about the documentation. So one of the part of bank audit is verification of documentation. Let us try to understand what is this, what does documentation means, and other things about documentation. So understanding the documentation, I have just bifurcated this in various heads. One is the purpose of documentation. What is the purpose of documentation? Whether documentation is required or what is the purpose of documentation. Then general documentation requirements, let us understand. Then types of advances. There are various types of advances. Let us also try to understand the types of advances. Nature of security. We have something called primary security and collateral security. Then bank's process and procedure for advances. Nature of borrowing arrangements and reporting requirements under LFAR. So let us try to understand one by one in the next slide. So the purpose of documentation. What is the purpose of documentation? Of course, I think I need not explain to you what do you mean by documentation. Because documentation is a record where there is a contract entered into between two parties to just, it's a document in writing signed by both the parties, which is there for entering into a contract. So what is the purpose of documentation? So one is the name of borrower. So whenever there is a contract between the bankers and the borrower. So this is we are talking about lending of advances. That is when the bank is giving loans to a borrower. What are the documentation the bankers has to take it. First one is the purpose of documentation is name of the borrower. So we should know who is the person who is borrowing. What is his name? So first the purpose of documentation we can understand is we have to know the name of the borrower. Then address of borrower. So just knowing the name of the borrower may not be sufficient. We should also know the address of the borrower. Where is his permanent address? What is his communication address? All those things is required so that in future if you want to contact him, you should have address the borrower. Then status of borrower. When I talk about status of borrower, all of you are aware of Section 231 of the Income Tax Act, which defines person. So there are different types of persons that has been defined in Section 231. So when I talk about status of borrower, we have to understand whether the borrower is an individual or a company or a partnership firm or association of persons, or what is the status of that particular borrower, we should understand. So the purpose of documentation is to know the status of borrower. Then type of loan. So when I talk about loan, there are different types of loans. We will understand that in the future slide. The type of loan that has been given to the borrower. What is the type of loan that that a borrower takes and the banker is giving? So that we should understand. Then the amount of loan. What is the amount of loan taken by the borrower? So what is that amount? Whether he has borrowed 50 lakhs, whether he has borrowed 75 lakhs, 60 lakhs, or 1 crore. The amount of loan that has been taken by the borrower, we will know from the documentation. Then terms of loan. When we talk about terms of loan, we should know whether it is a term loan or demand loan, on-demand loan or term loan. And if it is a term loan, what is the period of loan? So suppose if you take a vehicle loan, it would have been given for say 36 months or 48 months. So you will know the period of that particular term loan. Or if it is a housing loan, the type of loan being a housing loan, then it can be 10 years, 15 years, 20 years or 25 years, depending upon the age of the borrower and is the repaying capabilities and all. So the terms of loan will be defined in the documentation. And finally, acknowledgement by borrower. So after knowing all these things, we have to get the acknowledgement. Acknowledgement in the form of signature by the borrower saying that yes, he has taken this particular amount with all these things. This is my name, this is my address, this is my status, this is the type of loan I have taken and the amount of loan that I have taken, and this is my terms of taking the loan. So I will be repaying this particular loan in so and so number of installments or on demand, whatever it is type of the loan. So that should be acknowledged by the borrower. So the main purpose of documentation is to know all these things. That is name, address, status, type, amount, terms of loan, and then acknowledgement by borrower. Then what are the general documentation requirements? We understood what is the purpose of documentation. Now, what are the documents required? General document required. One is the loan application form. So to get all those things, where to write the name, address, status and all. So there is an application form. And this loan application form differs from bank to bank, and also in the same bank, it differs from loan to loan. So for one particular type of loan, there may be one application form. The other type of loans, there may be other type of application. So the main documentation, it's like a accounting entry. So whenever you make an accounting entry, the primary document is the voucher. So based on the voucher, we are recording the transactions of a particular business. So the primary document for recording any transaction in the books of accounts is voucher. Similar to that, for advancing or giving any loans, the first document will be the loan application form. So you should, the general documentation, first you should know, you should see whether there is a loan application form. Then KYC norms. So when we talk about KYC norms, that is know your client, customer or client norms, for whatever he acknowledges or whatever he states, we should have certain proofs. So attachment should be there. So know your customer norms, say like now he gives his name, date of birth, status, all those things. We may ask for his Aadhaar card, we may ask for his PAN details. Even it serves for both his name, photo, status, and also his address. So for all those things, whatever that requirements are there, KYC norms, that has to be collected. Then acknowledgement of debt, as I said, the borrower has to acknowledge that particular loan that he has been taken. And acknowledgement of debt is also there when the loan is taken. After 3 to 4 years, if still it is outstanding, every 3 years, he has to renew that acknowledgement. is stating that still I owe this much of amount to the banker. So he has to keep renewing that particular acknowledgement of debt. Then photo of borrower. Now the bankers will insist for photo of borrowers because not only the name and address, but they also want the photo of the borrower. Then security documents or title deed. So depending upon the loan that has been taken and whatever the security the bankers get because of giving a particular loan, all those security documents or title deeds. In case of immovable property, they take the title deeds. The original title deeds will be taken by the banker. Then project reports or projections wherever required. In case of a new loans for the business or profession, then the bankers insist for a project reports or projections. So usually bankers say kindly give us your projections for next 3 years or 5 years, depending upon the period of loan that has been amount of loan and also the period of the term of the loan. They may ask for next 5 years projections. So maybe you would have most of you would have done that project report where for your clients, if they want to go for a bank loans, these things will be required, and you may have to prepare that, and the banker should go through that project reports and projections based on which they can decide what is the amount of loan this particular business needs. Then borrower credibility. After giving all those documents, the important thing that one has to see is what is his credit worthiness and what is his credibility. Whether if I lend this advance or give this loan to a particular borrower, whether I'll get it back. So because the bankers, when they give the loans, one of the primary intention of giving loans is to earn income. See, whatever deposits the bankers collect, and they have to pay interest on that, like SBI account, current account, they may not pay the interest. SBI account, fixed deposit, or recurring deposit, that's all liability for a banker. That they have to repay the deposits, also pay interest on that. So what is the income part for a bank is from the loans, interest on advances, that's the loans that has been made by the banker. So before making a loan, they should ensure that they will get back that loan. That is, the borrower will repay the principal and also pay the interest, because interest on borrowing is the income of any bank asset. So they will take all the required precautions to know the credibility of the borrower. So when once you see a documentation, because now in bank audit, what's happening in most of the cases, so it's all centralized, it was all server based. Many banks, wherever we are going for bank audit, you may not get to see most of the documentation because they say it's all sent to some central office, or they have a separate place where to keep the documentation of a particular region or sub-region. So it may not be available for you to get all the documentation. But wherever there are new loans that has been issued, even in a particular previous year, you can insist for few documentation, you can get all those documentation. So whenever you go for a bank audit, initially within the first day or within second day, see that which are all the loans for which you require the documentation, and inform the banker, so that if possibility is there, they can get those documents and you can verify all these things. Borrower credibility, now we have something called CIBIL report, where for any individuals or even I think for firm and companies also you may get the CIBIL reports. So you will get the rating. So that is one of the measure to see what is the credibility of a borrower. Then also you can get the income tax returns, like last 3 years income tax returns. You can the bankers will insist. Then they also get some other documents, like some other documents meaning they will say you just give your bank statement for last 6 months or 1 year, and let us see what is your transactions in a particular bank. Say suppose a person who is a salaried employee, he will say that my salary is 1 lakh per month. Then banker says kindly give your bank statement, where we will know that you are getting 1 lakh every month. So past 1 year or 6 months, you get me the bank statement. Similarly, if a businessman says that I have made a turnover of 50 lakhs or 1 crore in the previous year, then also they will insist kindly give the bank statement where at least they should see there's a transaction of nearing to 50 lakhs or 1 crore, what the person is saying. So for all those things, various documents, civil report, IT returns, and maybe even GST returns are asked. So many things where the bankers may insist to know the credibility of a borrower before lending any advances. So these are some of the general documentation requirements. Apart from this particular loan, they may have additional documentation requirements that every bank, every loan, when you go to the every feature and every loan, what are the requirements you should see and ensure that those requirements or those documents are collected by the bank. Then coming to, we are discussing about advances all this while. Let us understand what are the types of advances. So just made some of the categories of advances. One is sector-wise. When we talk about sector-wise advances, it is priority sector advances and other sectors. When I say priority sector, it includes like agricultural loans, MSME loans, a small housing loan, vehicle loans. All those things are coming under priority sector. Apart from that, any other loans, we consider it as other sector. Then we want to do geography-wise types of advances, advances made within India and advances made outside India. That also one classification we can make. And security-wise. Security-wise, we have secured loans and unsecured loans. Most of the bankers, they won't give any unsecured loans. At least they insist on some amount of security until unless it is a very small amount of loans that has been given by the banker. Otherwise, most of the loans that will be given will be secured loans. There may be situation where initially they give the secured loans, but after a certain period of time, because of deterioration in the value of security, it will become unsecured loans. Otherwise, while issuing the loans, most of the banks, they won't give any unsecured loans. Then we have this financial wise, one is fund-based loans and non-fund-based loans. So let us try to understand some of these things in detail. So types of advances, I said it is fund-based advances and non-fund-based advances. When we talk about fund-based advance, it means that bankers are actually giving a loan, that is in the form of giving money to the borrower. Non-fund-based are those advances where there is no movement of funds, that is the bankers are not giving anything upfront, but they give assurances. It's like an assurance, like they are giving letters of credit, bank guarantee, or letter of comfort, etc. But when it comes about fund-based advances, it talks about term loans, cash credits, overdraft, demand loans, etc. So actually, there is a outflow of money. In fund-based advances, there is actual outflow of money. In case of non-fund-based, there is no outflow of money. There is only a initial guarantee. After happening of certain events, it's a contingent type of loan where after a particular period of time, because of happening of something, the bankers may have to give that particular or discharge their what is that guarantee that they would have given. At that time, the non-fund based may become fund based. So initially, when they give the loans, there will be fund based and non-fund based type of advances. Then we are talking about types of advances. These are some of the advances that we have just listed down. So apart from this, few more advances will be there. Now, if we see what are the types of advances and the documentation required, first one is agricultural loan. So for agricultural loan, what all the documentation required? So say suppose you are going for once you go for a bank audit, there is some agricultural loan given, and you will ask for this particular document to verify the agricultural loan documentation. So what all the things you have to verify? Of course, that general documentation requirements, as we have explained earlier, those things will be there. That loan application form will be there. Then borrowers KYC norms will be there. Photo status, all those things will be there. But when it comes to agricultural loan, one thing you should remember is you should understand whether that particular borrower is an agriculturist. That you should ensure whether he is doing agriculture, and if he has taken agricultural loan to do agriculture on his land. For that particular land, you should see whether it is an agricultural land. To know whether that is an agricultural land, you will get some documentation from that village panchayat. So these basic things you should understand. So in agricultural land, you should first ensure that the loan is given to a farmer, and whatever that agricultural land that has been given, it is used for agriculture purposes. So for that, what all the documentation is required, that you have to ensure that is there in the agricultural loan. Then MSME loan, that is for small and medium enterprises. If you are giving for some small and medium enterprises, maybe you have to take that MSME loan certification. So they would have registered with small scale industries. That certificate you should obtain apart from the general documentation I'm saying. So that certificate you have to obtain. And if it is for what we call this production term loans and all, maybe you should see whether they have given a project report and whether the bankers have taken reasonable care to ensure that the borrower's credibility is proved, so that when once you give a loan, you will get back that amount. So the whatever loan given by the bank, they should get back. Otherwise, it will not become a performing advance. It will become non-performing advance. Then housing loan. Usually housing loan, when once you give, it will be mortgage. The house will be mortgaged, based on which the bankers lend or give this housing loan. So we should ensure that all the original documents of the particular house property, that immovable property, are with the banker. And also, if you see in there is something called encumbrance certificate. If you go to the register of registrars, they will give something called encumbrance certificate, where the property will be, they will give the details of who was the owner, from which owner this particular property has been purchased. So all those transactions with respect to a particular property will be given. So in that also, the bankers has to create that mortgage. So when once they create the mortgage, that will be exhibited in that encumbrance certificate, stating that this particular property is mortgaged to such and such a bank, and this is the loan amount that has been taken. So when you are verifying housing loan, ensure that all the original documents from the master deed. It's not just the transaction between the borrower and the previous owner. You should get all the previous, that is like from master document till the date of transaction. All those things should be there. Maybe you should see whether that CATA is in the name of the buyer or the borrower. Then you should see whether the municipal taxes have been paid. Then you should ensure that encumbrance certificate shows his name, that he has purchased from such and such party, and this loan has been mortgaged in the name of the banker. And also you should ensure that insurance has been taken, because if something happens to the house property, it will be difficult for the bankers to recover that particular loan. So ensure that there is a insurance coverage on that particular property. And also now bankers are ensuring that there is insurance coverage on the borrower also, because if something happens to the borrower, they want to ensure that that insurance amount will be adjusted against the loan that has been given. So there will create a lien on that particular insurance policy. So for housing loan, there will be various other documents that you have to take. Then there may be something called an education loan, like maybe all of you are doing this educational this thing like post-graduation courses. All of you are doing CA. If you have any one of you have taken education loan to pursue your CA course, when you go to the bankers, they will insist on previous records like SSLC mark sheet they'll ask, and second PC mark sheet they ask, and if you say I'm doing CA, they may ask you some of the documentation or your registration with the institute they may ask. Other security, who is the security, like if you are not repaying, whether your parents, one of them has given security. So all those related documents they will ask for education loan. Then export credit, of course, they will get the details of the person to whom you are exporting, whether you have got import-export license for that, and whether you have got any letter of guarantee or letter of comfort from the importer. So all those other additional documentation they may ask for. Then social infrastructure loans. Then we have Kisan credit card. Kisan credit card is also similar to agricultural loan, where a farmer will be given a type of credit card. It's not like what credit card, debit card we are talking or we are using for the bankers. It's like a overdraft facility. It will be given to a farmer, where the Kisan credit card is OD facility, which has to be renewed every year. So the farmer has to repay the principal amount and the interest within a period of next 1 year. So today, if he is taking the loan, today is what 25th of March 2021. If he takes say 1 lakh of Kisan credit card, by next year, that is end of 1 year, year one, that is 24th of March 2022, he has to repay the 1 lakh rupees of loan that he has taken, plus interest, whatever the interest that has been charged for 1 year, everything he has to repay and it has to become zero. Then he can renew it for next 1 more year. Then we have term loans. There will be various type of term loans, like even housing loan is a term loan. Education loan is also a term loan. Then we may have a vehicle loan. That is also a term loan for a period of say 36 months or 48 months. Depending upon the type of loans, you will take the documentation. Loans against fixed deposits and NSC. So if I have to tell you about loans against the fixed deposits, it's a case where the borrower has he has taken a fixed deposit in a particular bank, and giving that particular fixed deposit, he is taking loan on fixed deposit. So in the same bank, in the same branch, he has got a fixed deposit. On that fixed deposit, he is borrowing. So it is loan against the fixed deposit of the bank. So once you are giving a loan against fixed deposit or this NSC, National Savings Certificate, you should ensure that he has endorsed that. So he has to give that, and lien has been created, and he has assigned that particular fixed deposits and NSCs to the loan. So the back of the fixed deposit he has to sign and he has to give it. So and the original copy of the fixed deposits and National Savings Certificate should be there, forming part of the documentation. So when you are verifying the documentation with respect to loan against fixed deposits and NSCs, ensure that the original fixed deposits are there and he has signed and given that fixed deposits against this particular, assigned that fixed deposits to get this particular loan. Then loan against LIC policies, even in LIC or any other insurance company, this insurance policies we have taken for a period of, the policy may be for 20 years or 30 years, but after a few years, he wants to borrow some amount, so he wants to take loans. So you can create that, but we can give this surrender, means we can, against this insurance policies, he can create a lien. So he has to go to the insurance company, he has to get a surrender value. Surrender value means on a particular date, what is the value? You would have paid insurance premium for 10 years. The policy period may be 20 years. So you would have paid premium for 10 years, and because he cannot get back, get the money, he can borrow against that particular insurance premium. So on that, but at the end of 10th year, he can go and get the surrender value of that particular policy. Based on the surrender value, the bankers may give loans to the borrower. So it can be 75% of the surrender value or 80% of the surrender value, depending upon the percentage they fix, based on which they will give a loan to a particular borrower. Then we have this gold loan. So gold loan, all of you are aware of gold loans, so I need not explain about gold loans. So when we talk about gold loans, we should ensure that whatever the advances made against the gold ornaments, that you should ensure that it is there in the banker, there with the banker. And gold loan cannot be given against the bullion. That is, it should be given only against, should be taken only against the ornament. That is gold ornaments. The gold bullion, it is not considered as a gold for the purpose of lending. So the bankers cannot take the gold bullion and give loans to the person who is the owner of that particular gold bullion. So it can only give gold loans against the gold ornaments or any other type of ornament like diamond, silver, platinum and all. So it's not that they give loans to the bullion, the pure gold asset. Then we have a mortgage loan, as I explained with respect to the immovable property. Vehicle loan already I have explained. Apart from education loan, sometimes they'll be giving personal loans also. Of course, all of you are having cell phones now, mobile phones. Once in a week, you may get a call from someone saying that, are you interested in getting a personal loan? We will be interested to lend you the personal loans. So one suggestion here is, kindly don't get into this telemarketing traps, because when you take borrow from unknown sources through telephone, if you start borrowing loans, then there will be huge hidden costs in that, and there may be situation that you end up or land up paying more than what you are supposed to pay. So there are various examples you would have seen in the papers also, where there are certain companies which have come to India or through sitting outside India. They're lending loans to all these youngsters, because they'll be lured with all these phone calls. They'll be interested to take the loans, so they will take the loans, and since they cannot repay that loans, the interest also will be huge. Interest will be there, and there are various cases where these youngsters have surrendered themselves in the sense they have suicided themselves because they cannot repay the loan. If they borrow 5 lakhs, after a few years, it becomes 10 lakhs or 15 lakhs where they cannot pay. And to repay one particular loan, they are borrowing loans from other bankers as such. So one caution to all of you who are listening, don't get into all these telemarketing loan things, and don't borrow from any of the unknown sources. If you want to borrow loan, kindly enter into any bankers where face to face you sit and you understand what are the terms of that particular loan, you sign, and whatever that security they are asking, you give all those things, and borrow the nationalized banks or any type of banks. What I'm saying is, see that you are going and sitting there face to face, and you get the loan. And whenever you take a loan, have an intention to repay it. Just to take a loan and not to repay, don't do any of this adventure, because there are a lot of people who have been suffering with all this telemarketing loans as well. Then we have cash credit and overdraft facility. All these things, and even working capital demand loans, where all these things will be given for businesses. So when they give cash credit, they give against the stock statement or the stock of a particular business, or the debtors and paid creditors, all those things. They will calculate all those things, and they will give the margin based on the stock, because for the working capital, businesses require loans. They give overdraft facilities to businesses, cash credits to businesses. Then we have foreign currency loans, not in Indian rupees, it may be in foreign currency. Then we have other types of loans, that is bills discounted. So whether it may be a check discounting or a bill which has been received. Like what happens, certain bills, like if the person has worked for a particular government, then maybe the government will give a bill. They will sanction, means they will approve that work that has been given, and they will raise a bill. But sometimes it may take few months to get the actual payment. But they would have approved that particular work, and also they may state that you are eligible for this much of amount, but it takes some time. So that sometime, whatever it is, whether 1 month, 2 months, 3 months, the person who has done the work, he may not be in a position to wait for such long period, because he would have invested some amount. So he can approach certain bankers and say that these are all the bills which has been issued by the government or even private people, where they have credibility when they give the bills, when they approve for payment. After 2 months or 3 months, I am getting the payment. At that those things, the bankers may come forward and they discount those bills, so that with a small what do you say, a profit, like a small interest for that particular period of 1 month or 2 months, then we discount the bills. Then we have a letter of credit, bank guarantee, or a letter of comfort. So letter of credit for the customers who are all there with the bankers, they will give letter of credit. So the credit worthiness of a particular person will be given by the banker. So a person who is banking with a particular bank, if he wants some credibility statement, or somebody asks what is your credibility, then they may go to the bankers and say, this is what I've been doing with the bank, or this is the accounts that I'm maintaining with the bank, this is the transactions I'm doing with your branch, kindly give me a letter of credit. So the bankers may give letter of credit. Then bank guarantee. So if for certain transactions, certain parties, they ask for bank guarantee. So the bank guarantee also will be given by the bankers to their existing customers. For that, sometimes they may take the security, sometimes based on the relationship and based on the value of the transactions, without security also they can give bank guarantee. Then we have a letter of comfort. So this letter of comfort, usually difference between letter of means letter of credit and letter of comfort. If you ask me what is letter of comfort, so to give you an example, like one of the customer of a bank, he wants to import certain goods. So the person who is sitting outside, the exporter from outside India, he wants to send some either goods or services for which he expects some amount from, means he wants money from the person in India who is going to get those goods or services. Now he doesn't know the credit worthiness of this particular person, but just to know that he cannot keep quiet because he has to do the business. On that particular thing, he may insist the bankers of his country and also to contact the bankers of the importer. The person who is exporting outside India, his banker can get in touch with the banker of the person who is importing in India. Then these bankers can give based on the transactions, this bank can give letter of comfort to the other bank, so that they may say that yes, we have seen this particular person who is dealing with us, who is transacting with us. We will give you a letter of comfort. After receiving the goods and services, you will definitely repay this particular amount. The same thing can happen reverse also. Like if a person in India is exporting something outside India, he can also get letter of comfort from outside India from that particular banker, the banker of the importer. He can get it so that he can freely send the goods or services, and he need not worry too much about receiving that particular amount. So for all those type means each and every type of loans, there may be different type of documentation. So how do you remember all these things? It may be difficult for all of us to, each one of you to remember what are all the types of documentation required for each and every type of advance. So when you go and sit there in the bank where you are supposed to verify the bank audit, I mean the documentation, then there will be certain guidelines. Each and every bank may have certain guidelines for this particular loan. What are all the basic documentation you have to obtain? And of course, being the students, when you go, maybe you can take the help of your seniors or your principal. They will also explain to you what are all the documentation required for each and every type of loan, and then you can start verifying those documentation. So one thing you should remember in all these, most of these cases, when you are verifying the documentation, ensure that original copies are there with the bankers and not the Xerox copies or duplicate copies. Then after understanding the documentation requirement, now we will go for nature of security. So the nature of security, it may be a primary security or collateral security. So primary security is basically what is the directly related to that particular loan, whatever you take, that's the primary security. Sometimes the bankers may insist on collateral securities. Otherwise, in most of the cases, the primary security will be sufficient. What are the mode of creation of security? First one is mortgage. Mortgage loans means it refers to all immovable property loans. Like I was explaining to regarding this housing loan, where the house will be mortgaged. So in case of all immovable property, the property will be mortgaged to the bankers. So that is the creation of security in the form of mortgage. Then the other type of creation of security is in the form of pledging. Pledging means to give away. So you are pledging something on which you are getting a loan. So one of the examples may be a gold loan. So when we talk about gold loans, you will pledge the ornament. So we cannot say that when we are giving the gold loans, it should be the original gold loan. It's not that we give duplicate gold loans and take gold loans. So you have to give the original gold loans, because in many houses you see that they will have two sets of gold ornaments. One is original gold ornaments, and same thing replica, they have duplicate gold ornaments also. So when they are within the house, they wear these gold ornaments. Few people, when they go out, they wear all this what do you call this what do you call the duplicate gold ornaments as well. But when it comes to bankers, we have to give original gold ornaments to take gold loans. Just because when we go out, we use duplicate this thing, we cannot keep duplicate gold ornaments in the bankers and take loans. There are certain instances where some of the banks, the fraud would have happened, where they have kept duplicate gold ornaments and they have taken loans. This is hand in glove with even the bankers. There was huge fraud in one of the what do you call this, the district cooperative bank, where almost some 65 crores of gold loans were taken, wherein all the gold loans were taken on duplicate gold ornaments, and in most of the cases there was no ornament also. So when I discuss about audit planning, I'll tell you that when you go for audit, ensure that you verify all the physical verification of gold loans have to be done. How it has to be done, I will explain to you later. So when I give an example of pledge, the example I can give is gold loans. So see that the gold loans will be pledged. Then we have hypothecation mode of creation of security. This will be related to movable property. Like the mortgage I said about immovable property, hypothecation can be about for movable property. Movable property may be vehicle. One of the example I can give you is vehicles. So earlier you would have seen. Nowadays we are not seeing so much of that. This particular auto is hypothecated to such and such bank. On the back of the autos, they would have written hypothecated to such and such bank. And in some of the vehicles like buses and all, they would have written hypothecated to such and such bank. So movable property, hypothecation, they will give that title deeds or the original documents with the bankers, and they will release the loan. Even for livestock, the hypothecation will happen. That is, a farmer can buy sheep or buffalo or cows and all. That may be hypothecated. Based on that hypothecation, they will give the loans. Then assignment is one more creation of security. Assignment, as I said, that you will assign fixed deposits or national savings certificates, loans against fixed deposits and national savings certificates. You will assign that. So based on this fixed deposits, against that fixed deposits, we are borrowing loan. So that has been assigned. You will the borrower will sign that particular fixed deposits and what you call this national savings certificate, and you will assign that, and on that you will take the loan. Then other way of creation of security is set off. So the borrower may take some loan, and also he may have certain deposits in the same bank. Like he may have some personal loans, and he may have fixed deposits or recurring deposits in the same bank. So the bankers may also use this security, and when once it matures, they can set off the advances against the deposits against the advances made. Then lien, the same thing, like the fixed deposit can be one example for lien, or even the insurance policies, as I was explaining in the documentation. I said now in the house property, it's not just the bankers insist on the insurance on the house property, but also they insist on the insurance of that particular person who has taken the housing loan. So that when he takes a loan, say like a borrower has taken a housing loan of 50 lakhs, then the banker says you just take an insurance for 50 lakhs. So if you take the insurance policy of 50 lakhs, and he will be the housing loan may be period of 20 years, and the bankers also say you take a insurance policy for a period of 20 years where you keep paying the premium, and let the insurance value may be 50 lakhs. So the bank which gives the housing loan, the amount of loan is 50 lakhs, and the borrower also takes one insurance policy for next 20 years, because that's the term of the loan, and he will take the policy for 50 lakhs, and he keeps paying premium every year. So if in between the the borrower dies, he would have given that particular insurance as a lien to the this particular loan. So something happens in between and he dies, he will be eligible to get 50 lakhs. So on that particular point of time, what is the balance in the loan? They will allocate or take that to that particular banker's loan, and the balance they will give it to the legal heir. So he will create a charge or a lien on that particular insurance policy asset. Then the types of security, like personal security of guarantor. So it's not that for all the loans they ask for guarantor security. In most of the cases, the personal security of the borrower is sufficient. Usually they require guarantor. So what happens usually in case of housing loan, if say husband is earning and he is taking a housing loan, he will also put the name of his wife. So there will be co-owner. In case of co-owners, there is no requirement for additional guarantor. So in those cases, they will add the name of wife also. Or similarly, if wife is earning and taking a property, they will also add the name of the husband. So there will be a joint owners. In case of joint owners, because the primary security is a house property, they may not require additional security guarantor. In case of all these salaried employees, all these government employees and all, they will insist on another person to guarantee as a guarantor. So usually the employers or the people, they will only be the guarantor. In case this person who has taken the loan is not repaying, they will attach the salaries and they will recover from the particular employer. Then margin. So in case of certain loans, almost all the loans, there will be certain margins which has been is to be given by the borrower. Say in case of housing loan, if the bankers, if the borrower says I want 50 lakhs of loan, the banker says no problem, we will give 50 lakhs, but let there be a particular margin or some contribution from the borrower also. It's not that if entire 100% is given by banker, so he may not be interested in repaying also. He'll be simply enjoying that particular loan. So bankers insist that there should be some contribution or responsibility from the borrower side also. So they may say, now we will, this is the value of the property, 50 lakhs we will give, but we need a margin of 20% or 25%. So you bring 10 lakh rupees from your side or 12.5 lakh rupees from your side, we will give you 50 lakhs. So he may deposit 10 lakhs in his account or he may give it as a fixed deposit. Usually not a fixed deposit, he will give 10 lakhs and keeping that 10 lakhs, the bankers will release 50 lakhs. So there will be a 20% margin. Similarly, even for working capital, there are certain percentages. So when you verify that particular documentation, when I said the terms of loan, so there they would have mentioned what is the margin for this particular loan. In case of working capital requirement, they will say this should be the loan. Like your banker says, so the debtors, that is what is receivable, you may take 25%. Then stock minus creditors, that is only paid stock, on that they may give 80%. So something like that they will arrive at the eligibility of a particular person or the borrower. So it depends upon case to case basis. When you go to the application form, you can see that what is the terms of the particular loan, all these margin requirements, everything should be there. So whenever when I'm talking about the documentation, verification of the documentation when it comes, you ensure that all the paper are signed by the borrower and also counter signed by the one of the officials of the banker. So each and every page you see that whether it has been properly signed, and application should be completely filled up. Nothing should be left as blank. So if it is not applicable, they should at least write not applicable. So whenever you take an application form, ensure that you read, verify from starting till the end and see that everything has been completely filled in. Then we have securities and other instruments. Like securities means you can borrow loans against shares or fixed deposits. Then goods is there. So sometimes you may have to place that goods and then take a loan. Then gold ornaments already I explained. Life insurance policies I have explained. Immovable properties also I have explained. Then plantations. The standing crops is also a type of security. So they cannot take the plantation, keep in the bank because it's also like an immovable property. So if the banker is giving a loan on immovable property, they cannot ask that immovable property to be brought and kept in the bank. So they cannot because it cannot be moved. So only the title deeds of that particular property can be held by the bankers. The plantation on the standing crops, they can also give loans. That's also a security. So that there may be an agreement between the borrower and the bankers when once this plantation, wherever it is completed and you will get the final product. So when you are selling that, first it has to be adjusted against the loan and balance will go to the borrower. Then banks process and procedure for advances. So while there may be different processes of advances, first one is sanction. So at the time of sanction, what is the process and procedure for advances? The major documentation, whatever we have discussed so far, or whatever you understood about the documentation requirement, at the time of sanction of a particular advance, bankers should ensure that major part of the documentation has been taken care. So they will take care of all those documentation requirements. Then at the time of disbursement of a loan, so first one is sanction of a loan. So at that point of time, you take all the major documentation. Then at the time of disbursement of the loan, some of the bankers now insist for post-dated checks. The post-dated checks by the borrower so that their repayment they will take care. Then after disbursement, supervision. So when they talk about supervision of the loan, if it is a business loan where they have given against stock, so they have to insist on the stock statement. Monthly stock statement should be there. So whenever you go for cash credit loans, which has been given against the stock and debtors of a particular customer or borrower, we should ensure that every month they are giving the stock statement. So you can also sit and see, take the documentation and see whether the stock statements are there for all the 12 months. So now you are doing the audit for 2021, that is March 20 to April 21. So one of you can take a few of the cash credit accounts and take that particular file, and all these documents should be in the branch itself. It will not be somewhere else. You ask them to give the stock statement of a few major customers of that particular branch and see that whether the stock statement has been received. And there will be some due dates for receiving the stock statement. You ensure that the stock statements are received within the due date. So for the month of April 2020, whether you received the stock statement, May 2020, whether you received the stock statement. Based on the stock statement, what is the eligibility of the particular loan, whether they are within that particular eligibility or they have overdrawn that particular thing. And during the year, you should also ensure that the audited stock, audited financials, if it is under audit or subject to audit, you should ensure whether it is subject to audit or not subject to audit. You should ensure that the financials, the signed financials and income tax returns, all those things are handed over to the banker. Then sometimes inspection also is required. So if it is a huge advances, supervision and inspection, like if you say you would have, it need not be even huge advances, even small advances, like if you have given for a small timer, like if you have given for a vehicle. So there should be an inspection department where they ensure that the vehicle is in good condition, it is running, it is flying. So like that, standing crops may be one of the security, which they cannot keep it within the bank. So they should go and see in frequent intervals whether any work is done on that particular farm, and nature means the standing crops or the crops, the growth of that particular crops can be seen. Apart from this, if they have given other types of loans, they can go on do the inspection. Even they can, even you can also insist to means you can also take some select some big advance of that particular bank. If it is a manufacturing unit, you can just go there and they would have given some stock statement. So you can go there to that particular entity and see in their books of accounts. They will be maintaining books of accounts, whether the stock given to the bankers and the stock in the books of accounts are matching. That also you can see. So you can say that you can select 3 or 4 big customers. So you can talk to the manager that you would like to go and do the inspection. You would like to go and see the stock. So they would have given some stock. They will say one of the customer may give that he has got stock of 5 crores or 6 crores. But when once you go to the particular industry, you may find that the stock is only 1 crore or 2 crores. There may be huge difference between the stock statements given to the bankers and actual stock lying in that particular premises. So all those things you can inspect and you can also give your opinion on these securities as well. Then acknowledgement of debt, as I said earlier also, after 3 years, any debt will get expired. So it has to be renewed. So any advances that has been older for more than 2 to 3 years, more than 3 years, you should ensure that the borrower is coming and acknowledging that particular debt. The example is, say, suppose you have given a loan of for a housing loan you have given, which is for a period of 15 years. So after every 3 years, the banker should insist, call the borrower and see that they will acknowledge the debt after every 3 years. So one is acknowledgement of debt. They should ensure that the borrower is still there and is active, and you can see that particular borrower as a banker. Then also is acknowledging the outstanding balance after 3 years that he has to pay this much to the banker. So that acknowledgement of debt you have to ensure for all those loans which is outstanding for more than 3 to 4 years. Renewal, revaluation of security, etc. In some huge big advances where the securities are being given, if it requires revaluation of the value of security, that also you can increase. So if they have given some immovable property, they would have given some valuation report. at the time of borrowing a particular loan, they would have given the valuation report, and they also give the legal valuation. So legal complaints or legal from a lawyer, they will take what is that, whether this particular documents are proper. So even the lawyer will give his legal opinion, and the valuer will give the valuer will give this what do you call this the valuation of the particular property. What is the valuation of property? Based on that valuation of property, they will pick up the loan. And if the bankers feel that this security has to be revalued after a certain period, then you can they may get the revaluation report. So, and each bank has its own process and procedures. Whatever we discussed so far, it may not be a standard procedure for all the process for all the banks, and also it may not be a standard procedure and process for each and every type of loan. So it depends upon bankers to bankers, and the same bank, it also depends between each type of loans. So these are all some of the things I thought I will explain to you regarding the documentation, and a few more things. The nature of borrowing arrangement. One is we have sole banking arrangement, consortium arrangement, and multiple banking. Sole banking means the borrower is getting the loan from one particular bank. Then we have a consortium arrangement. Consortium arrangement means where two or more banks come together and they will give certain loans to a particular borrower. Then multiple banking means the same person getting loans from various banks. He can get loan from bank A, can get loan from bank B, can get loan from bank C. That's a multiple banking. He gets a loans. He gets different types of loans or different type of facilities. Then reporting requirements under LFR. So now we would have verified all these things. Where you have to report, we have something called long form audit report. I'll not get into more details of LFR, only with respect to documentation I will tell. Maybe tomorrow's session where they'll be talking about long form audit report requirements. They also may mention about these things, but because I've dealt with the documentation, the LFR requirements with respect to documentation, let me just take you through. So with respect to advances, it asks these 5 questions: the credit appraisal, then sanctioning and disbursement, documentation, review, monitoring and supervision, guarantees, and letter of credit. So credit appraisal, it says, in your opinion, as the branch generally complied with the procedures or instructions of the controlling authority of the bank regarding loan applications, preparation of proposals for grant or renewal of advances, enhancement of limits, etc., including adequate appraisal documentation in respect thereof. So credit appraisal, already we have dealt in detail in the previous slide. So whenever the bankers are giving any loans, so there will be some instructions for each and every bank. So what are all the basic documentation or what are the basic tests you have to do to obtain the credit worthiness or credit appraisal of the borrower. So if you come across certain instances where the credit appraisals are not up to the mark or not done, then you may have to give the opinion. Otherwise, generally, whether if they have complied. So when you see the documentation, you will understand whether they have complied with all the requirements. I also mentioned in most of the cases nowadays, the documentations are kept at one particular place, not in the branch. So there may be a situation where you go for bank audit, but you will not be in a position to verify most of the documentation. Then what you have to write? How you will write this credit appraisal? Then you may have to give a disclaimer stating that since we are not in a position to verify the documentation because it's not in the branch, it is kept somewhere else, and maybe you should have insisted, and the bankers may say it's not required because there is a centralized storage of those documentation and a separate audit is taken care for that particular branch. Then you can mention all those things and saying that since we have not verified those documents, then we are not in a position to give the exact credit appraisal measures that has been taken by the bank. So some kind of a disclaimer you can clearly mention in this particular point. Then sanctioning and disbursement, of course, this LFAR, it requires us to report on various aspects. So here also there are two things that you have to report. In the cases examined by you, it is not that all the cases you have to report. And whenever you select the documentation, you ensure that you are taking the documentation of the loans that has been sanctioned in the previous year. So I said we are doing the audit for the financial year 2020, that is from 1st of April 20 to 31st of March 21. So whatever that advances that has been given or sanctioned by the bank or the branch, we are talking about the branch in that particular previous year, in that majority you cannot see, like it's not the 100% of the documentation you can verify because of paucity of time, because usually what happens the first week of April, they will ask you to start the bank audit and they'll give the deadline by 5th or 6th of April you complete, or 10th of April you complete, or 15th of April you complete. So usually you will get a very less time to do the audit in detail. So on the test check basis you have to do. That's what they say in the cases examined by you. So selection of cases is your choice, and you should ensure your diligence and selecting those cases where you select the cases which covers majority of the loans. Like you have to select the high valued loans, borrowings in a particular previous year, so that for the year whatever the loans that has been given, at least ensure that 50 to 60% of that particular loans are covered. So examined by you, have you come across instances of credit facilities having been sanctioned beyond the delegated authority or limit fixed for the branch? Usually what happens for the branches, there will be a limit. So they will have certain limits. So if they can only sanction loans within that limit. If it is exceeding that limit, then they may have to go to the regional office, or when if it exceeds that limit, they may have to go to the central office or head office, something like that. So the bankers, wherever they are lending loans, first once you go into the bank, you should ensure that what are the limits fixed for that particular branch. So if you ask for the manager, he will give what are the limits that has been fixed for that particular branch, what is the limits of the bank manager. And if there are any loans that has been sanctioned beyond that particular limit, they are asking a question, are such cases promptly reported to higher authorities? So higher authorities means for branches in a regional office or central office, whatever, depending upon the next level of officers, they have to report it. Then the next question is, the cases examined by you, have you come across instances where advance have been dispersed without complying with the terms and conditions of the sanction? If so, give details of such cases. So like when you give the loan, there may be certain conditions. Like one of the things you can take an example is, like the banker says the example what I gave with respect to housing loan. So the borrower when approached the bankers, the example I said, 20% is the margin money that the borrower has to keep, so that when he deposits 10 lakhs in the account, then the bankers will give 50 lakhs. For 50 lakhs, 10%, 20% is the margin, that is 10 lakhs. So if there is something like that, where the bankers have to disperse loan after getting the 20% margin, we should ensure that it has happened. If that has not been complied with, so with the terms and conditions of the sanction, if that has not been complied, you have to give such details of such cases. So wherever it may be some out of 15 cases, 1 or 2 cases, this complaints won't have taken place. Then if you come across in the cases examined by, it's not that 100% of the cases, even there in the cases examined by you, if you have come across such instances, that you have to report it. Then documentation per se, like credit facilities released by the branch without execution of all the necessary documents. So this is reporting requirements with respect to documentation. Earlier we saw about credit facilities and disbursement. Now we are talking about documentation. So all this time I've been explaining about what is the basic documentation, what are the requirements. So if you just to see if any credit facility has been released without execution of all necessary documents, then that has to be reported here. Then instance of deficiencies in documentation, non-registration of charges, non-obtaining of guarantees, etc. So there are various list of documents for a particular loan, advance asset, and if there are any shortfalls or any deficiencies in documentation, or wherever there are certain loans where has to be registration, charge has to be created, or you have to obtain a guarantee. So if those things are not being done, this is all covered as a instance of deficiencies in documentation, then you have to report that. Whether advances against lien of deposits have been properly granted by making a lien on the deposit. So lien of deposits, that is fixed deposits, where you are borrowing, I was talking about assignment and lien, both even for a fixed deposit, you can take it as a lien. So if you are borrowing, if you are taking a loan against fixed deposits, you should ensure that a proper lien has been created and the original fixed deposits are there. So in case of those loans against fixed deposits, if proper lien has not been marked, then there is a deficiency in the documentation. So whenever you go for bank audit, all these loans against fixed deposits, it will not be kept in the central place. All those things definitely will be in the branch. If branch manager says, no, sir, we have a central bank assets or branch assets where all the documentation will go, will be lying with you people. The fixed deposits and all, it cannot go anywhere. It should be fixed deposits, gold loans and all. Most of this will be with the branch itself. So say suppose when you go for a bank audit and you find the loans against fixed deposits, there are say around 100 or 200 depending upon the size of the branch, or it may be 20, 30 also. Then you just ask the banks to bring all those documents. Say suppose 100 loans are there against deposits, you ask them to get all those documents. And for loans against deposits, there will be only one sheet of application and original fixed deposits will be attached to that. So that one person can spend 1 or 2 hours and you can verify all those 100 to 150, whatever the number of documents are there, and see whether the lien has been marked in a proper place. So wherever you feel that it is not there or original is not there, you can make a list of those documents. And deficiencies in documentation, sometimes even when as I told you, in case of facilities, that is cash credit facilities, it will be given against this stock statements. I said you can, one of you can sit and get all those cash credit loans, then ensure that the stock statements are given for each and every month, that is from April to March. If something is missing, you can say that you can make a note of it, and you can also report that as a deficiency in documentation. So this is with respect to the documentation. Now, before getting into the IRAC norms, that is income recognition and asset classification norms, maybe I can take few minutes of time. Hello. Hello. Suraj. Hello. Hello.
Yes, sir. Srinivas, sir. Yes, sir. Manjunath here.
Just 5-10 minutes. I'll take a break. If there are any questions, I think the students can raise.
Okay.
Is that okay?
That should be fine.
Just 5 minutes. Yeah.
Okay.
Then I can start with this IRAC now.
Yes, yes, yes.
I'll stop sharing. Yeah.
Okay. Right, sir. Right, sir. Can stop the video.
Yeah. Video will be there if there are any questions or something like that. Manjunath, any questions are there? Manjunath?
No, sir, I'm not able to see any questions from students. I'll just
Okay.
check.
I think one question is there, letter of credit or I think somebody has raised hands, Mr. Balamurali Tudipalli. I don't know
Balamurali, yeah.
whether he- yeah.
Balamurali, in case if you want to ask some questions, you can.
Okay, so they wanted, somebody is asking for letter of comfort. Akshay, 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 Lakshmi, Neil Bekunda, Lakshmi. Yeah, listen that. Well, Manjunath, a few of the things I've come across. I'll just, hello?
Yes, please, sir. Yes, please, sir. Go ahead.
Yeah, yeah. A few people have asked for sharing of PPT. Definitely, I think I already shared with Bangalore CICASA. They may be interested. They will be sharing that PPT at the end of the session. And few of you asked about letter of credit and letter of comfort. Just to elaborate difference between letter of credit and letter of comfort. As I explained to you earlier, letter of credit will be given by to the existing customers. Like say one person is dealing with another person, he may ask for the credit worthiness of a borrower. Means the person who is dealing with a customer. Just to give an example, in a bank there is one customer called A, and he wants to do some business with locally with some other person called B. So he may ask for the letter of credit, the worthiness of Mr. A. Then he may approach the bankers and he may say that this is a requirement to do business with B is asking for my letter of credit, my credit worthiness. Then bankers, depending upon the transactions or depending upon the credibility of that particular person, they may give the letter of credit. While giving the letter of credit, they may also insist for bank guarantee. So it's not just sometimes they may not give letter of credit just like that. For giving some letter of credit, they may insist on bank guarantee. So that letter of credit they will take and he will give to B, and then there will be a business transaction. This is within a country where A and B are doing the transaction. Now I gave an example where there is a transaction between two persons of two different countries as well. Now I may be an exporter or importer. Now let me take an example of exporter. Mr. A is an exporter. He is doing manufacturing certain products, and he is what do you say, this exporting to a person B in some other country. So he will have some doubts whether when once I export these goods, whether I will receive the amount from that particular person. Then this he may insist for letter of comfort. Letter of comfort meaning, so the bank, because he may not be in a position to what you can say, like get to know the credit worthiness of the person who is buying the goods. So he will insist for the bankers with whom that buyer is dealing and the bankers with whom this person is dealing. The bankers will give a letter of comfort. So the banker will ask, like, my customer is exporting to you, your customer. So whether your customer's credit worthiness, whether you can ensure that, whether you can give us the credit worthiness, because the exporter cannot go and do physical verification of the person in other country. Then the bankers will give letter of comfort. So based on their what do you call that transactions and based on their credit worthiness, the person, the importer banker, he will give the letter of comfort to the person who is exporting from India. So that will be something called letter of comfort. The bankers to bankers, there will be a letter of comfort. For that giving letter of comfort, they may charge some charges. That banker also may charge, this bank also may charge. Then when once they get the letter of comfort, so they will export the goods and they will give these documents to the bankers. Right away they will give the documents to the bankers, not to the importer. And the bankers will give the documents to the person who has imported when once they receive the amount from the importer, and that amount they will transfer it directly to the exporter's bank. So this is something called letter of comfort, which may be a little bit different from letter of credit. And most of the banks, of course, when once you go into the city branches, sometimes you may get to these type of documents. Otherwise, in most of the banks, you may not come across practically these type of documents as well. Was that clear? Yes, Manjunath, can we get on to the next this thing?
Yes, please, sir. Yes, please, sir.
If there are no other questions, then we will just move on to the. I think the audibility and all is okay for all of you, all the students, and I think.
Yes, sir.
Yeah.
Audio and video is good.
Okay. Now, okay. Now, after understanding this, what do you call this, documentation requirements, the next part of the discussion is IRAC norms. What is this IRAC norms? This was introduced in the year 1992 based on Narasimhan Committee. Before 1992, we didn't have this IRAC norms. I told you that I'm doing audit from 1992 when I was in the first year of articles, or maybe I just completed 1 year, or not even first year. I think I was within that first year. 1991, I started my articleship. We do in the month of August after my BCom. So usually we do this bank audit in the month of April. So first year when I went there, these prudential norms were not there, even though I did the audit in 1992. That in 1993, all these things came. This IRAC norms came, introduced in the year 1992. And the policy, what do we mean by IRAC? Policy of income recognition to be objective and based on record of recovery rather than on subjective considerations. So IRAC, as you see the 4 words IRAC, first one is income, second one is recognition, then the third A is asset, the fourth letter C is classification. So income recognition based on asset classification. So this is a concept which came, and main thing of this income recognition, it should be objective based and not subjective consideration. So that was the main purpose of getting this IRAC norms. This IRAC guidelines is for, as I explained, income recognition, asset classification, provisioning, and other related matters. These guidelines are commonly referred as prudential guidelines or prudential norms, meaning careful and avoiding risk assets. So initially, when this IRAC norms came in the year 1992, it was almost for, if I remember vaguely, it was almost for 18 months. The window was 18 months as such. Then it came to 15 months, 12 months. So that is 4 quarters, 3 quarters, 2 quarters, and at presently it is 1 quarter, that is 90 days. So IRAC norms, if you want to understand this, it's the meaning of IRAC is income recognition and asset classification. Based on the classification of assets, the income recognition norms will apply. So what we are understanding in IRAC, RBI guidelines with respect to the classification of advance, then classification norms for NPAs. NPAs means non-performing advances or non-performing assets, what we call. Then we will understand something about income recognition. Then we will understand about provisioning requirements, and finally the disclosure requirements of all these advances assets. When you are doing the bank audit for the first year or second year, most of the time you may not be given all these work assets, like your seniors or your principals will take care of all these things until unless you are proactive or you prove that you are capable of doing all these things. So that proving your capabilities, it's not in the bank audit you have to do. While you are working in the office, you should give that much of confidence to your seniors and to your principals that, okay, if I give this particular work to this particular person, you will at least come out with some value addition. So those things, if you want to do, you have to learn, you have to read certain things and also learn certain things on the job. Okay. Now, classification of advances. We are talking about asset classification. So basically, there are two types of classification of assets. One is performing asset, the other one is non-performing asset. So let us understand there are two types of classification of an asset. Asset here means I am referring to advances, that is loans that has been given. So performing asset or non-performing asset. When I say about performing asset, a performing asset is such asset which generates income for bank. So generating income for bank is a performing asset. Not generating income for bank is a non-performing asset. So performance means you are generating income. Non-performing means you are not generating any income for the bank. So asset includes even leased assets, and it also becomes non-performing when it ceases to generate income for the bank. And the performing asset means an asset which is serviced regularly with payment of interest and principal amount. So when we talk about generating income for the bank, what is the income? As I said earlier, for the advances given by the bank, the income is in the nature of interest. So generating income of the bank means those are the assets where it has been regularly served with the payment of both interest and principal amount. So if it is not served regularly with interest and the principal amount, then it becomes non-performing asset. So if when once interest and principal are coming regularly, then it is considered as a performing asset. So first let us understand this concept called performing asset and non-performing asset. Performing asset is one where it generates income for the bank. When I talk about income, when I refer to the income, it is the interest on the loans borrowed. So you should get not only the interest, also the principal has to be served. That particular loan has to be served with interest and principal repayment. Non-performing asset is one where it is not generating income for bank, meaning this is a asset or a loan where the repayment of interest or principal, whatever it may be, or both, is not in a regular manner or it is not happening. So there is a difference between a performing asset and non-performing asset. Performing asset where it is served with repayment of both interest and principal on a regular basis. Non-performing asset not being done on a regular basis. So NPA, non-performing asset means, and how to understand this non-performing asset? As I said earlier, we started with almost 18 months. Now it has come to 90 days because this is the 90 days norm. It's a worldwide norm. So international standards, even we have brought into this Indian banking system. It's not that this NPA is a new concept for all of you. Any paper if you open once in a week or once in 15 days, you will read somewhere the heading that it talks about non-performing assets. And over a period of last few years, the non-performing assets in the banks have increased substantially, and they have taken various measures to reduce this non-performing assets. They have also influxed some of the capital to the bankers. The government has taken various steps to see that the NPAs are reduced or the non-performing assets are written off, and so that you can make the bank's balance sheet viable or more prominent or more stable as such. And considering or determining an asset as performing or non-performing. Performing, we know where it has been serviced regularly. Now we are talking about non-performing. It depends upon loan to loan. Like every particular type of loan, you have to determine based on certain principles whether it is non-performing or performing. First one, let us take it as term loans. So what is a term loan? Already I have explained. So a term loan is treated as NPA if interest and or installment of principal remain overdue for a period of more than 90 days. So what is this overdue? We will understand later. Now first let me tell you about this term loans. A term loan is treated as NPA if interest and or installment of principal remain overdue for a period of more than 90 days. So if any installment is overdue for more than 90 days, then it will be considered as a non-performing asset. So say suppose now there is a, just to give an example, there is a term loan where in all these term loans there will be EMI. You would have you know about EMI, that is earnest monthly installment, equated monthly installment, where every month there is a EMI that has to be paid, which includes both the components, that is the principal component and interest component. So today you are sitting and going for an audit, like today in the sense first week of April you are going for an audit. You will take a particular term loan and see whether it has been serviced. So when you take a term loan, first thing you see the statement, you see whether EMIs have come from for all the 12 months. So 12 EMI should be there in a particular period as a year. So if all the 12 EMIs are there, and if you calculate, if you see that it has been regularly serviced, there is no problem. If you find that out of 12 EMIs, only 5 EMIs have come or 7 EMIs have come, afterwards, say from November onwards, you have not received November, December, January, February, March, 5 months EMI you have not received. You will open a bank term loan account and you see that 5 EMIs are not there. Then you should get into the more details of that particular loan and see whether that it was overdue and it has not been paid for after a period of 90 days. Say the example what I gave, assuming that till November all the EMIs have been paid, till October, from November, December, January, February, March, that EMIs are not being paid. So let us assume that repayment period is 10th of every month. So 10th of October was the EMI that was paid. Next amount was due on 10th of November. And if you feel that, if you see that it has not been serviced, then 90 days from that particular date, it will become a NPA. So 10th November, 10th December, 10th January, and 10th February is the 90 days period from that particular due date. In that particular date, still you have not received the EMIs, then that particular loan will become an NPA. Then we are talking about cash credits and overdraft. A cash credit or overdraft account is treated as NPA if it remains out of order for 90 days. So what is out of order? Again, we will see later. So in respect of cash credits and overdrafts, you have to consider, you have to examine whether that particular CC or overdraft is out of order for 90 days. Then bills purchased and discounted. So we have understood something about bills purchased and discounted. They are also treated as NPA if they remain overdue for a period of more than 90 days. Then other loans, demand loans, the account will be treated as NPA if it is overdue for a period of more than 90 days. Then credit card dues, like now you see that all the banks will give debit card and credit card. Credit card dues, the account will be treated as NPA if minimum amount due as mentioned in the statement is not paid fully within 90 days from the payment due date mentioned in the statement. So in credit card, what happens is if you have taken some credit using a credit card, the amount is 5,000. They will say the minimum payment due. It's not that entire 5,000 will be due. Maybe 5% or 10%. Usually it will be 5%. 250 rupees is supposed to be paid. So if you are not paid the 250 rupees after 90 days from the due date, then it will become a NPA. Then securitization, the asset is to be treated as NPA if the amount of liquidity facility remains outstanding for more than 90 days. Then derivative transactions, the overdue receivable if they remain unpaid for a period of 90 days from the specified due date for payment. Then we have another type of advances here, which is called as an agricultural advance. So in case of agricultural advances, we are not talking about 90 days concept. Here we have something called crop season. So there are two things in this agricultural advances. One is long duration crop. The other one is short duration crop. So in case of long duration crop, an account will be considered as an NPA, that is non-performing asset, if the installment of principal or interest thereon remains overdue for one crop season. Let us understand what is that crop season afterwards. Now, to understand the treatment of an NPA, in case of long duration crops, an advance will become NPA if the installment of principal or interest remains overdue for one crop season. In all this time what I have discussed in all these type of loans, if either of the interest or principal is overdue, then it will become overdue. It is not that if the person pays the interest and principal is overdue, will that be considered as NPA? Definitely it will be considered as NPA. Then short duration crops, it will become a non-performing asset if the installment of principal or interest thereon remains overdue for two crop seasons. So the difference between long duration crops and short duration crop is, in case of long duration crops, if the installment is due for more than one crop season, it becomes an NPA. In case of short duration crops, if the installment of principal remains overdue for two crop seasons, it will become an NPA. What is this long duration crop? And what is this short duration crop? Long duration crops means such crops where the crop season is longer than 1 year, and short duration crops are those crops where the crop season is less than 1 year. So there are certain crops where it may take more than 1 year to grow, and there are certain crops where it will take less than 1 year to grow. So less than 1 year it is considered as short duration crops. More than 1 year it is considered as long duration crops. So in case of long duration crop loans, it will become NPA if one installment is if it is overdue for one crop season. In case of short duration crops, it will be considered as NPA if it is overdue for two crop seasons. So for example, long duration crops, I will give you an example of the sugarcane. Sugarcane, they say it will take almost 15 to 18 months. Let us take for example, it will take 15 months. So it is beyond the 1 year, that is beyond 12 months. So it is considered as long duration crop. So there is a first installment due on a particular date, and the crop season is 15 months. We have to see whether that has been serviced in the next 15 months. If it is not serviced in the next 15 months, that is one crop season has elapsed, then it will become as NPA. The other example I can give is for paddy or wheat, where assume it will take 6 months. 6 months means it is less than 1 year, then it is considered as a short duration crop. In this case, where it is a short duration crop, you have to wait for 2 crop seasons. So 6 months plus 6 months, 2 crop seasons will become 1 year. So if some installment is due up to 1 year, beyond that 1 year, it will be considered as a non-performing asset. So what do we understand by these crops? When we are talking about long duration crop, short duration crop, and also we mentioned crop season longer than 1 year and crop season less than 1 year. What do we understand by this crop season? For each crop means the period from sowing of seeds to harvesting of the crops raised. So it starts from the starting till the ending. So it starts from sowing of the seeds up to the harvesting of the crop, that is considered as a crop season. So all the process, like when I said sugar cane or paddy, it starts from sowing the seeds and finally when you get the harvesting. And who will decide this crop season? Determination of crop season by state level, bankers committee in each state. So is it that the bank will decide the crop season, or the borrower will decide the crop season, or we, when we go and sit there for audit, we decide the crop season? The answer is no. It will be decided by the state level bankers committee. So each and every district will have a they will have some group of in a particular district. All the bankers will form a committee, that is state level bankers committee, because it's not that every district grow a similar crop. So it's not that sitting in Bangalore, there may be there we have 30 districts in Karnataka. Sitting in Bangalore, I cannot decide in district A, district 1, district 3, district 4, district 5. These are all the crops, so this will be the crop season. So this state level bankers committee, they will have a committee which will be formed within the district, and they will decide. So in this district, these are all the crops that have been grown. So suppose if I take Mandya district, there sugarcane will be grown more. So that people, they know what is the crop season. So like that, other places where paddy is grown or where wheat is grown. In Punjab, if you take, wheat is grown. Or if you take Madikeri and all, where coffee and other things are grown, Chikmagalur, all those places. So they know what is the crop season. So that particular committee, that bankers committee. So all the bank in that particular district, they come together and they decide for this particular crop, this will be the season. So for paddy, this will be 6 months, for sugarcane 18 months. So based on that, there will be a circular issued by that state level banking committee, bankers committee. On that basis, we can decide whether it is a short-term loan or not short-term loan, short duration crop or long duration crop. So when once the bankers may say short duration crop, they may say it is long duration crops because you will get more time. So they may say for a particular crop, you may say that it's 6 months or 8 months. They may say, no, sir, it is 12 months or 15 months. So instead of getting into argument with the bankers, which we may not be knowing technically, so we should ask for this, insist for this state level bankers committee report. For every year, there will be a report. You get that report and ensure that these are all the agricultural loans, these are all the type of crops. For this crop, this is the duration. Based on that, if it is less than 1 year, you decide it as short duration. If it is more than 1 year, you can consider it as a long duration. So which are all the loans that will be coming under this above norms, that is farm credit, agriculture infrastructure and ancillary activities, all related to agricultural advances. This crop season concept will come into picture. Then we have discussed about overdue. I said I will explain to you later, but a few things I have already told you about overdue. Just to get into the word by word definition of overdue: any amount due to the bank under any facility is overdue if it is not paid on the due date fixed by the bank. So I gave an example of EMI where November every month the 10th is the due date for making a payment. So October 10th EMI has been paid and November 10th EMI has not been paid. So if it is not paid on that particular date, from that date fixed by the bank, it will be the overdue will start. And from 10th November, 90 days, if he has not paid, then it will become an NPA at the end of 90th day, not on 10th November. So this you should understand. The asset will become NPA only after the expiry of 90 days, not in the first day. Now, in the example I said, 10th November he has not paid. So 10th to 30 days will be 9th December, 60 days will be 9th January, 90 days will be 9th February. So you should ask me if you have a doubt whether this asset becomes NPA on 10th November or 9th February. The answer is it becomes NPA on 9th February. That is, after the expiry of 90 days, it will be considered as an NPA. So I think that should be clear. So it's not that even though it is not performing, you cannot take 10th November as a NPA date. After 90 days, we will take that is 9th February as a NPA date. So it is not that. One more question you can ask whether we should take NPA dates on the last day of the financial, that is 31st of March 2021 when we go for audit. The answer is no. You have to verify each and every loan account, whatever possible. And in this case, as I said, it will not be on 31st March. It will be on 9th February itself. It will become an NPA. Like that, there may be various dates. You should verify that and fix the date of NPA. It may not be on the last date of the financial year. It can be any date in the financial year. And in line with the international best practices and to ensure greater transparency, the RBI has directed the banks to adopt 90 days overdue now. This also explained. Initially, it was started with almost 18 months. Now it has come to 90 days to have in line with international best practices. So the 90 days is the norm that has been adopted. After 90 days, it becomes a NPA. Then we discussed about out of order in case of cash credits and overdrafts. So an account should be treated as out of order. So when an account can be treated as out of order, so these are all the three criteria. So it says RR. So this the three criteria. If the outstanding balance remains continuously in excess of sanction limit or drawing power, whichever is lower. Now, even in case of out of order, we have to apply that 90 days norm. Like overdue, we have applied 90 days norm. Even in case of out of order, we have to apply this 90 days norm. So this is with respect to cash credits or OD facilities that has been given. So based on the documentation, assume a borrower has given has got a sanction limit of OD or cash credits or OD of say 10 lakh rupees. The drawing power will be defined based on the documents he submits. Say based on the stock statement, even though he has got a sanction limit of 10 lakhs, assume he has got a drawing power of 9 lakhs. Now, it says if the outstanding balance remains continuously in excess of the sanction limit or drawing power, whichever is lower. Now, sanction limit of a particular CC, cash credit or overdraft is 10 lakhs and drawing power is 9 lakhs. And if you just go to that particular OD account, if you see that limit of that particular OD, now assume that here whichever is lower is 9 lakh rupees. Drawing power is 9 lakh, sanction limit is 10 lakh. So now you have to take 9 lakh as the base. You should see for the 90 days continuously whether the drawing power is exceeding. That is, it is 11 lakhs. 11 lakhs for last 4 months or 5 months. If it is exceeding the drawing power, then it will become out of order. That is the first criteria. Second criteria, or it says or. If you see this the bullet point, it says if the outstanding balance remains continuously in excess of sanction limit, whichever is lower, or In cases where the outstanding balance in the principal operating account is less than the sanction limit or drawing power, whichever is low, but there are no credits continuously for 90 days as on the date of balance sheet. So the first situation is the example I gave, sanction limit 10 lakhs, drawing power 9 lakhs. So whichever is less, you will take 9 lakhs. The OD account is exceeding that limit for continuously, say 100 days. So it is not coming below 9 lakhs at all. There are so many transactions, but still the amount is more than 9 lakhs. How you will see that? You have to see the daily balances. You have to get the daily balances of a particular CC credit. For the entire year, you can generate now because everything is in computers. If it is exceeding the drawing power, it will become a out of order account. The second situation, it is not exceeding 9 lakhs. The same example. Suppose it was 7.5 lakhs, and by end of 90 days, it becomes 8.5 lakhs or 8,80,000. Still, it is less than 9 lakhs. But there are no credits, only debits in a particular account. Then also it will become out of order. So this is the second situation. First situation, continuously 90 days, it is exceeding the drawing power. In the example I gave, it is exceeding the 9 lakh rupees. Second situation, it is not exceeding 9 lakhs, but there are no credits in the particular CC account or OD account. Then also it is considered as out of order. And there are no credits continuously for 90 days as on the date of balance sheet. Or the third situation is there are certain credits, but that credits are not enough to cover the interest debited during the same period. So now you will take a window of 90 days. In the examples I gave, second situation where there are no credits. Third situation, there are some credits. So it was 7.5 lakhs, now it has become 8,80,000. Now it has become 8,80,000. There is some credit of 20,000. So if that 20,000 was not there, it would have become 9 lakhs. Because that 20,000 credit is there, it has become 8,80,000. This is the third situation I'm saying. Now there are certain credits. It is not coming, means it is not falling under category 1. It is not falling under category 2 because category 2 says there are no credits. Third category says there are credits. But interest debited in that last 90 days period is, assume it is 25,000. Now the credits is 20,000, interest debited is 25,000. This 20,000 will not cover the interest debited during the same period, that is 90 days. Then also it will become out of order. If all these criteria, means any of these criteria is there in a particular cash credits or overdraft account, then it becomes out of order, and then it will be after 90 days it will be considered as a non-performing asset. I hope you would have understood about overdue and out of order situation. Now coming to the broad categories of advances for IRAC NAMs, we have performing assets. It is considered as standard asset. When it comes to non-performing assets, again we have three classifications. One is a substandard asset. Next we have doubtful assets. The third one is loss asset. So performing asset being a standard asset which do not disclose any problems and does not carry more than normal risk. So that is considered as standard asset. You know the definition of standard asset, where it is being serviced regularly with the repayment of interest and principal amount. The non-performing asset, substandard asset, which has remained NPA for a period less than or equal to 12 months. So in the example, one of the term loans example I gave, November 10th, from November 10th onwards, it is not being serviced. So February 9th, 2021, it has become NPA. On 31st of March 2021, the status of NPA, the period of NPA is less than 12 months. So it will be a NPA, but it is a substandard asset. Then when it will become doubtful asset, which has remained as substandard for a period of 12 months. So from 9th February 2021, still nothing has been serviced, it is an NPA. 9th February 2022, it will become a doubtful asset. Then there is the other category of loss assets. loss has been identified with the bank or internal or external auditors or RBI inspection. So there is a situation where the bank itself has identified a particular asset or advances loss, or based on the auditor, the external auditors like concurrent auditors or RBI inspection auditors, they will say that this is not recoverable, then it will be considered as loss asset. Upgradation of NPA accounts is permissible on repayment of arrears of interest and principal by the borrower. So that in the example I said, it will become an NPA on 9th of February. Assuming by 31st of March he will repay all the 5 installments. Then from NPA it becomes PA, that is performing asset. Such account should no longer be treated as NPA and may be classified as standard asset directly. Upgradation within NPA category is not permitted. So when there is a non-performing asset, if it has been serviced with both interest and principal, it will be straight away considered as a performing asset. But within the category of NPA, that is, if you have considered it a doubtful asset, you cannot make it as substandard asset. It should, if it is an NPA with the same classification, even if it is serviced, still it is an NPA, it will be in the same category. Then, like banks are required to identify incipient stress in the account by creating a sub-asset category, namely special mention account. So nowadays, bankers have been insisted to categorize all the advances as SMA account, that is special mention account. So SMA has got subcategories and 3 subcategories. SMA 0 means principal or interest payments not overdue for more than 30 days, but account showing signs of incipient stress. So in they will have this, they will generate this particular SMA reports. Every quarter they will generate. If a particular asset has not been paid within overdue for less than 30 days, they will categorize it as SMA 0. SMA 1 means principal or interest payment overdue between 31 days to 60 days, and SMA 2, principal or interest payment overdue between 61 to 90 days. So these things have started long back, but of late the bankers, whenever you go for audit, you should ask for this SMA report so that you can see whether there is any loans where it is slipping from performing to non-performing. You can just take care of those things or review that in more detail. Then we will get into this classification norms for NPAs. I'll just run through these things because already we are in 6:30. So still, I think I've completed around 28 slides out of 50 slides. So I'll be a bit faster here. So people should bear with me. Account classification norms for NPAs. Accounts with temporary deficiencies not to be classified as NPA. So if what do you mean by temporary deficiencies? Means like I was talking about obtaining the stock statement in case of cash credit. So if one of the months you have not received the stock statement, it can be considered as temporary deficiencies, and you should not go for classifying such assets as non-performing assets. And you should also see some of the assets regularized here about the balance sheet date and after balance sheet date to be handled properly. So there one asset has not been serviced, but suddenly at the time of balance sheet, at the time of finalization, in the month of March or first, second or third of April, that has been regularized. Then you should be more careful and you should see whether is there any other facility that has been granted to a particular borrower, same borrower. From that facility, they have repaid this particular loan asset. So you should ensure that those things are not happening. Net worth of borrower or guarantor or availability of security. So this borrower's net worth and guarantor's net worth and availability of security, you will take at the time of sanctioning of the loan. It's not that because of due to certain things happening, if the net worth of borrower is not proper, or guarantor is not proper, then you cannot consider that, treat that as a reason for treating a particular advance as NPA. If that particular asset has been serviced regularly, you need not worry about the net worth of the borrower or guarantor or availability of security. So long as so forth that asset has been serviced regularly, you need not worry too much about other things. Asset classification to be borrower wise, not facility wise. So whenever you go to a bank audit, the classification of asset, what is asset classification? The performing asset or non-performing asset. It should be borrower wise and not facility wise. A particular borrower has got various facilities. And one thing you should understand here is, if one asset is performing, one facility is performing, other facility is non-performing, we should consider everything as non-performing. Even the performing asset should be considered as non-performing. I'll give an example. One person would have taken 4 types of loans in a bank. One is a vehicle loan, you would have taken a housing loan, you would have taken a cash credit, and you would have taken a personal loan. So out of these 4, assume that 2 or 3 are performing, 1 is non-performing. Then you have to categorize everything as non-performing assets. Similarly, there will be certain advances given to primary agricultural credit societies, PACs, or FSS, that is Farmer Service Societies, under on-lending system. This it will take more time for me to explain. So because of paucity of time, I'm not getting to these details. This is a situation where the bankers will give loans to this society, that is FSS or PACS. In turn, these societies will give loans to the members of the society. So assume that there are 3 or 4 types of loans that they are given. So one loan they will give to, these are all basically to small and medium enterprise or small and very small farmers. These societies, they will be helping. Assume that there are 3 facilities given. One facility they will give say a particular fact stating that we will give you this loan. You identify the farmers in your locality and give this loan for getting sheep or cow or buffalo, whatever that animal. Then one more loan they will give, and they will say for this particular loan, you identify people to get what do you say that let them buy tractor, which will be used for agriculture purpose. Another loan they will give, and they say whoever wants to get a borewell in their land, use this particular facility and give borewell loans to the farmers. Now, the first classification I said borrower wise, the classification should be borrower wise, not facility wise. So if you take these 3 loans, it will be in the name of this PACs or FSS. In turn, in the PACs books, they will have for each and every loan, they may be having some 100, 200 farmers. So the 3 loans, assuming that 2 loans are serviced, 1 loan is not serviced and it will become NPA. In these situations, considering the above line, that is borrower wise, not facility wise, I cannot consider all the 3 as non-performing. In these situations, the performing will be performing, non-performing will be non-performing. The above category applies only to individual borrower or individual entity assets, not for this PACs and FSU. The same thing applies to LCBD also. In case of LCs given, that letter of credit given or bills discounting, these things happen only after certain time. That is, these are all contingent advances. So if other advances are non-performing, we cannot treat this as non-performing. It can still be a performing. Until unless you invoke the guarantee and it has been dishonored, then this also will become a non-performing asset. Advance against term deposits, NSTs and life insurance need not be treated as NPAs, provided adequate margin is available in the account. Usually when you give loans against a term deposits, they will have certain margins. So if you give a FD of 1 lakh, they will say we will lend you only 75% of that particular amount. But depending upon the customer, they can even give 80%, 85% or 90%, not 100%. So they will have sufficient margin. So these advances will not become NPAs at any point of time. That's why they say if adequate margin is available, it will not be treated as NPA. Advance against gold ornaments, government securities, and all other securities can be treated as NPA if the loan is not serviced and it is overdue as per the IRAC norms applicable. That is, more than 90 days if it is not repaid, then these loans also can be considered as non-performing loans. Whenever you go to the bankers, they say, sir, gold loans will not be considered as NPAs. So you cannot listen to that. Gold loans can definitely be considered as NPAs if it is not serviced, which means if it is overdue for more than 90 days. Usually the bankers will try to confuse you and say that, no, sir, gold ornaments, gold loans is not NPA. It cannot become NPA because we have gold ornaments with us. So that you cannot buy that argument. See that if it is overdue for more than 90 days, you have to classify it as a non-performing asset. Then partial credit enhancement, I'll just leave for the time being. Agricultural advances affected by natural calamities. So agricultural loans, we see that there will be natural calamities. There are two types of natural calamities. One is there may be floods in a particular place where whatever the crop that has been grown, it may be washed away, or there may be no rain, drought. So it can be either drought or flood. So many things, natural calamities, which is not in the control of either the bankers or the farmer. So in those cases, there will be reschedulement of the loans. Like whenever there is elections, the government will come and they will say we will reschedule the loan, or we will even waiver of loans, Salamanna, we call it in Kannada, either Salamanna, Baddi Manna. Every government comes, they want to get more votes from these what you call this particular people, or it may be sometimes maybe natural also. It's not that always we should give a color of politics. Sometimes definitely there will be natural calamities where they require some support. So at that point of time, many times it will be rescheduled or repayment period will be extended. At that particular point of time, based on the extended period, you have to classify the NPS. Erosion in value of securities or fraud committed by borrowers. So sometimes whatever the securities that have been given, there may be erosion in the value of securities. Say for example, there's a house property which has been kept as a security, and there's some natural calamity where that house property would have been destroyed. So there's erosion in the value of security, or fraud committed by borrowers. So in those situations, if erosion in the value of security is more than 50%, asset to be classified as doubtful straight away, even though it has been serviced, because there is a erosion in the value of securities of more than 50%, then the asset has to be classified as doubtful asset. Say, for example, value of security given at the time of borrowing is say 10 lakhs. Because of certain things that have happened, it has come to 4 lakhs. So erosion is more than 50%. Even though the loan has been serviced, then it has to be considered as doubtful. There may be a situation where if realizable value of security is less than 10% of outstanding in the borrower's account, asset should be classified as loss asset. So this is another situation where the value of securities is deteriorated so much that the realizable value is less than 10% of the outstanding balance in the borrower account. So one example where we have given a security of 2 lakhs and his outstanding balance is 1 lakh, and there's an erosion in the value of the security where the value of the security is less than 10% of the outstanding amount. So his outstanding amount is 1 lakh, 10% of that 1 lakh is 10,000, assuming that the security value is 8,000. So it has come down less than 10% of the outstanding balance, then it will be considered as a loss asset, not the doubtful asset. Government guaranteed advance also can be considered as NPAs. Advances under consortium. Consortium advances, as I said, it will be a group of bankers where they will give loans. Should be based on the record of recovery of respective individual member banks and other aspects having a bearing on the recoverability of the advance. So there are 2 or 3 banks. Say, let us take an example of 3 banks. Together, they have given an advance as a consortium advance to one particular person. So that particular borrower would have been servicing one bank, and may not be servicing other two banks because he may be interested in one bank because the service is good in that bank. The other two banks, because of some reasons, he wouldn't have service. Just because one bank is performing, other two banks are not performing, this bank also cannot treat it as a non-performing asset. So they have to consider individually. They have to examine individually, even in case of consortium advances, whether that loan in that particular bank or branch is serviced properly. If it is serviced as, you can treat it as performing, otherwise you should treat it as non-performing. Project finance under moratorium period, let me skip this. The moratorium period means, okay. Sometimes what happens in case of this moratorium, to give an example, suppose you would have a person would have taken housing loan, where what I have written is something, what I am telling is a different example. It talks about agricultural plantation, but I am talking about agricultural housing loan. So suppose a person has taken a housing loan for construction of a property, and assuming that construction takes place for say 1.5 years, so the banker says we will give you the loan and we will start charging the interest, but we will give a moratorium period or gestation period of say 15 months because your construction period is 18 months, or it may be such that they may also have an understanding that they will give a moratorium period of 18 months or 24 months. So where they say after this 24 months your EMI will start. Till that time they will be debiting the interest, but you should not consider it as you should not apply these norms and consider it as performing or non-performing. The other example I can give you is with respect to education loan. Like I said, you can go to a particular bank. If you are doing CA, you can get an education loan. Even in case of education loan, it so happens that during the period of education, that is a course, like say suppose let us take example of CA itself. You go and approach a bank and say that I have completed my second PUC or BCom, whatever it is, and I have to do my CA course. So bankers will understand because by this time they know what is the CA course. They will say that okay, we will give you a loan. We will give you a loan where there will be a moratorium period of 4 years, because 3 to 3.5 years is what an intelligent student or a student may take to complete CA. And they also say that maybe another 6 months after completing CA, you have to get a job and you have to get yourself established so that you can repay the amount. So when they give the education loan, they say 4 years. The course period is 3 years, but we will give you 1 more year. 4 years, we will not pay anything. We will be debiting interest from after 4th year. That is after 48 months. From 49 months, you have to start repaying, irrespective of whether you complete the course or not. You have to start repaying. So there will be a moratorium period. So while calculating NPA, just because interest has been charged and it has not been serviced, we will not treat it as NPA, applying this IRAC norms. Then advances to staff. So this also like similar to what I explained to you regarding that gold loans. The bankers will say, sir, they're all staff members. We have their all retirement benefits. We have PF with us. We have gratuity with us. All those things, superannuation with us. So this staff loan can never become NPA. So just don't listen to all those arguments. Even staff loans, if it is not serviced, then you should ensure that it has to be classified as NPA. Because staff loans, what happens? There will be standing instructions where the bankers have to recover. So earlier it was all manual. Now I think with this computerization and CBS environment, automatically most of the things will be debited to their respective accounts and credited to the loan accounts as such. So now you may not come across all these irrecoverable things, but earlier, well, manually it was done, the irrecoverability would have happened. And there will be some cases where when a staff has taken an advance, he'll be in one particular branch. After 3 years, he'll be transferred, but the loan account won't have been transferred. It will be in the same branch where he has taken the original loan. and it will not be serviced. So at that time also, we should ensure that it is properly serviced, otherwise it will be considered as a NPA. And one more thing, in case of staff loans, so in case of housing loan or similar advances granted to staff members where interest is paid after recovery of principal. So say in case of staff loans, the bankers will say first we will recover the interest and then you start paying the principal amount. So the terms of loan is such that first we will keep debiting the interest, you keep on paying the interest. Finally, we will after the recovery of the interest, we will collect the principal. So in those cases, we cannot say that because principal is not repaid, we will consider it as NPA. So we should see the terms and conditions of that particular loan, and based on that, we will decide whether it is a performing or non-performing. And when we talk about staff, when they take loan for staff, banker is acts in a two different capacity. One as a banker, one as an employer. The staff advances by a bank as an employer and not as banker are required to be included under the subhead others under the schedule of other assets. So if a staff is taking some advances from the banker and the banker is giving as an employer, say like he's giving some salary advance he's taking, or some festival advance is taking, or some medical advance is taking, that we cannot consider it as a borrowing, and we cannot classify it as under the head borrowings and apply this 90 days norms and all. So only when the staff borrows certain loans, like he will take housing loan, vehicle loan, gold loan, whatever the general loans given for public, the staff is taking, that has to be considered as a loan. And any advances taken by the staff as a employer, the bank is giving as an employer, that should not be considered as a advances. Advances granted under rehabilitation package. Okay, I'll skip this. Post shipment supplier credit, where the credit extended by banks or guaranteed by Exim Bank. The extent to which payment has been guaranteed from Exim Bank, that portion of advance may not be treated as NPA. Post shipment supplier credit, where after the shipment is done, the Exim Bank may give certain guarantee. So there may be a situation where there is a borrowing of by the exporter, there is a borrowing of 50 lakhs. The Exim Bank may say, I will give a guarantee of 10 lakhs. So then 40 lakhs the exporter has to pay. If there is a situation where it has to be considered as an NPA, that portion of advance as guaranteed by Exim Bank need not be considered as NPA. So on the date of NPA, assume that 50 lakhs loan, there is an outstanding of 35 lakhs. Exim Bank has given guarantee for 10 lakhs. So we will treat 10 lakhs as performing and 25 lakhs as non-performing. These are from the IRAC norms with respect to asset classification. Now we have understood the last two words, that is in IRAC, we have understood the AC, that is asset classification. Asset classification, two types, performing assets, non-performing assets. Non-performing assets, three types, that is substandard asset, doubtful asset, and loss asset. Now we are coming to the first two letters, that is income recognition. The policy of income recognition has to be objective and based on the record of recovery. So it should be based on the record of recovery. So just like that, the bankers should not keep on recognizing the income. So the guidelines requires that banks should not recognize income on non-performing assets until it is actually realized. This will apply to government guaranteed accounts also. So one principle you should understand is the income recognition. What is income here? Income on for the bank is interest that will be earned on the advances made. So income recognition can be done only on the performing assets, not on non-performing assets. So all these non-performing assets you should not recognize or realize accrue the interest. So because most of the banks are in the form of companies, and in companies you have to do the accounting based on accrual basis of accounting, method of accounting. So interest you should not accrue on non-performing assets. income should not be recognized on non-performing assets. It should be recognized only on the non-performing assets. So interest income on advances against term deposits, NSCs, IVPs, KVPs, and LICs will be recognized on accrual basis provided adequate margin is available in the account. So when once I say we should not recognize income on non-performing assets, during the year a particular asset would have become non-performing. But before you identify that this asset has been become non-performing, you would have accrued the income, because in most of the banks, interest will be accrued on monthly basis, on certain accounts on quarterly basis, on certain accounts on half-yearly and yearly basis. So in case of new NPAs, as at the close of any year, interest accrued and credited in the past period should be reversed if the same is not realized. So if say suppose in a particular account you have credited the interest, but you have not realized that. So any income that has been recognized with respect to a non-performing asset which has not been recovered, to that extent it has to be reversed. Similarly, any fees, commission and other similar income accrued should be reversed if uncollected. This applies to government guarantee accounts also. All unrecovered finance levies recognized on leased assets should be reversed or provided for when asset becomes NPA. So one basic thing you should understand, in case of non-performing assets, we understand that income should not be recognized. That is one thing. But when once it becomes an NPA during a previous year, if there are certain amounts that has been credited in the past, that is receivable you have shown, but it has not been received. So all those things have to be reversed, whether it is with respect to the interest or any fees, commission or similar things that has been debited to that particular account not received, everything has to be reversed. So the income of the bankers will reduce to that extent which has been charged on NPA account, that is non-performing assets, but not realized. Partial recoveries in case, okay, whatever you have recovered, whether you would have debited say 10,000 rupees, but you have recovered only 3,000 rupees. 3,000 can be taken as income for that year, and the balance 7,000 should be reversed. And when once you reverse this interest, so it should be reversed, means it should not be written off in the books of accounts. So because when once you write off in the books of accounts, subsequently it will be difficult for you to recover that from the borrower. So usually they will have something called a memorandum account or shadow account, where they will have one more in a tally. If you are doing, we will have something called memorandum account, where if you select that memorandum, it will not form part of the books of account. So it will be separately showing there. So in the bank also, in a particular software, they may have something called memorandum account or shadow account, where what is receivable from the borrower and not realized, they will debit to some other account. So when once subsequently borrower will come and say that yes, I want to regularize this account, or tell me what is the amount that I am due towards interest and towards principal, the bank should be in a position to definitely immediately recover that particular transaction or particular account, and say that this is the due from as on date, this is due from you towards interest and principal. And once he makes the payment, it can be recognized. So if it is not, it cannot be in the main account. It can be kept as a memorandum account or shadow account, and from there it will not form part of the main accounts, and that interest will not be recognized as income. Then next thing is provisioning. What is the amount of provision that needs to be done for this non-performing asset. In case of loss asset, 100% of the outstanding balance will be provided for unless written off. So 100% of the amount of outstanding balance in case of loss asset, provisioning should be 100%. In case of doubtful assets, again in case of doubtful assets, there are three categories. And there something called, we have something called secured portion and unsecured portion. On unsecured portion of outstanding balances, 100% provision has to be done. And on secured portion, If it is doubtful asset, less than or equal to 1 year, 25%. If the asset is doubtful for more than 1 year and less than 3 years, 40%. And if it is doubtful for more than 3 years, it will become 100% provisioning. One thing, let me tell you, provisioning will be, most of the provisioning things will be done at the head office. You need not worry too much about the provisioning, but of course, it's better to know these percentages. So whenever, if you get an opportunity to see these things, you can apply these provisions and verify whether what the things done by the bankers are correct. And nowadays, most of the bankers and the CBS, everything will be calculated, what you call, in the server itself, in the system itself. So that again, you may have to cross verify and ensure that what they have done is correct. Then substandard assets, 15% general provision on outstanding. Then 10% additional provision on unsecured exposures. So total 25% total provision, and 20% overall provisioning in case of infrastructure loan accounts. So what is this additional 10% on unsecured exposure? Unsecured exposure means where realizable value of the tangible security as assessed by the bank or approved valuers or RBI inspectors is not more than 10% of the outstanding exposure. So if it is the realizable value is not more than 10% of the outstanding exposure, then it is considered as unsecured exposure, and additional 10% will be provided. Then in case of standard assets, there are separate categories of assets. Direct advances to agriculture and SME sectors start with 0.25%, and for commercial real estate 1%, commercial real estate residential housing 0.75%. Then housing advances during teaser rate interest, they say 2%. What is this teaser rate interest means? They may say they may come out with a scheme. Say suppose now within next 30 days, if you are applying for a housing loan, we will give you at this particular rate. So which will attract the customers to come and take a particular housing loan. All other types of standard assets is 0.4%. Then disclosures, third schedule to the Banking Regulation Act requires classification of advances as follows. One is nature of advance, then nature and extent of security, then place of making advance in India or outside India. We just get into this thing. Nature of advances, it can be either bill purchased and discounted, or it can be in the form of cash credit, overdrafts and demand loans, or term loans. So based on the nature of advance, there will be a disclosure or classification, and based on nature and extent of security, secured by tangible assets, covered by bank or government guarantee, and unsecured. So this is also one more classification. Then place of making advance in India or outside India. Advances in India, sector wise you can take priority sector, public sector, banks and others. And when it comes to advances outside India, due from banks, due from others, bills purchased and discounted, syndicated loans and others. So these are some of the disclosure norms with respect to this advances. Now, the last thing in today's discussion is audit planning. I think I will take another 10 to 15, maybe maximum 10 minutes, and I will wind up. Is that okay, Manjunath? Another 10 minutes? Hello?
It should be fine. It should be fine, sir. It should be fine, sir.
Oh, okay. So now we'll move on to the last thing, that is audit planning. So the name is audit planning, but I have given whatever my experience I have shared. It is audit execution as well. So let me just take you through this 2 or 3 slides of audit planning. So whenever you enter the bank, so entering the bank, introduce yourself and get introduced to the staff of the bank and the manager. So the experience what I have got over the past 30 years, no banker is interested to get audit from you people. They are least bothered about, most of them, I'm telling, not that everybody, most of them are least bothered about getting their branch audit. This is a statutory requirement, so you will go, like it's like you people attending, most of you, this GMCS course or ITT, because it's mandatory, you will attend. Otherwise, most of you will not be interested voluntarily to attend. The same thing should not happen with your articleship, because it is mandatory. You are coming to the articleship. No, you should be very serious in articleship and also in your PMCS and ITT. So whenever you go to the bank, as per my experience, the bankers may not be interested to get their accounts audited. So whenever you go and sit with in front of them, they will say, "How many sir this agate?" So one distal mugustira, ಎರಡು distal mugustira. So they'll be very eager to receive you, and more than that, they'll be eager to send you off also. So first, when you enter the bank, introduce yourself and get introduced to the staff of the bank and the manager. Then have the copy of appointment letter allotted to your firm. If you are going alone, that is not with your principals, or if you are going with your principal also, you can help or support your principals or your seniors to get all these things. So have the copy of appointment letter allotted to your firm and show them that you are the auditor for the current year, because every year you will keep getting a different branches. It's not that the same branches you will get. So you go and give that particular appointment letter and say that for the current year we are the auditors appointed. So then once backend, when you are appointed for a particular bank audit, you ensure that your principal has to ensure, I'm just telling you, that he has to communicate with the previous auditor and get a no objection letter. I have not written here because it's not for students, for the principal, but anyway, you should know that so that you can, if it is not there, you can help that, you can prepare that no objection letter from the previous auditor and get the no objection certificate. Whenever you get an appointment letter, they will tell who are the previous auditors. And once you know who are the previous auditors, you have to obtain a no objection letter from them. Have a questionnaire prepared before going to the bank. So you may have your own questionnaire. I have not given the format. Like questionnaire, just to give you what are the ingredients of question, I can tell you. Like you can ask in the questionnaire, like what is the advances in your bank, what are the deposits in your bank, then what are the limits of a particular bank. I told you earlier when we were discussing, there will be limits for each and every bank. The manager says, I have a limit of sanctioning this much of amount towards housing loan, this much of amount I have got a sanction limit of for CC. So every loan you may have a limit. So in the questionnaire you can have some of these questions you can ask, like what is the code of the bank, what is the advances, what is the total deposit, what are the limits for each and every loan. Then you can ask whether inspection report has happened, because RBI inspection happens once in 2 years or 3 years depending upon the branch, and there will be internal audit and there will be concurrent audit for few bigger branches. So you should ask all those things, whether it is subject to concurrent audit, whether it is subject to bank's internal audit, whether RBI inspection has happened. If it has happened, get those in the previous financial year, get those reports. Then whether any fraud has happened, whether it has been reported. So any cases are pending, whether you have gone on any borrower, whether you have filed any cases, pending cases. Like that you can have, based on your experiences, your principal and your seniors, you can sit with them and you can ask, you can prepare a questionnaire. When once you go there, you can hand over the questionnaire and get the same signed by the manager, and also you should collect the required information. Then, as I said, you obtain the last year's audited financial statement and opening trial balance and verify the opening balance. Not that it will not tally the opening balances, but it's better you take the last year's audited financial statement. That when once you go for an audit, this time you will sign the financial and hand it over to the bankers. Similarly, last time also the previous auditor would have done that. You just ask for that file, take the opening balance and start verifying the opening balances. Get previous year's audit report, concurrent audit report, RBI inspection report, internal audit report that has taken place in the previous year. So when once you get all these reports, so usually these people will have more time compared to the statutory auditors. Like as I said, we will have the fixed time. That is, when you go in the first week of April, they may say you may have to complete by 12th or you may have to complete by 15th of April. But that may not be the case with other auditors. Like when they come for internal audit, the bank's internal audit, they will spend almost 2 months, 3 months there. RBI inspection, if they come, they may spend 1 month or 1.5 months. Concurrent audit, throughout the year, they'll be doing it. So if you get those reports, they would have gone into detail, so more details, and they'll have more time to get into those details. So when once they would have gone into those details, they would have identified certain nuances or certain deficiencies in various aspects. In LFAR also, in one of the points, when once you attend tomorrow's session, you will come across those LFAR points, where it says, have you verified all these reports, whether inspection report has happened, whether internal audit has happened, whether concurrent audit report has audit has happened, and whether you have gone through those reports and whether you have considered those adverse points in your audit. All those things they will ask, so that when you go as a student, you're all in a supporting role. First year, second year, and all supporting role. When once you get to know more about bank audit, you can be in a more value addition you can do. So a junior can take all these things and can go to those places where there are certain deficiencies. You can make a note of it. So all those things can be given to your principal for preparing the final audit report. Then you have to do certain physical verification. So three important things, physical verification. One is cash. So on a particular date when you go for bank audit, either you can, cash usually will be done on before the starting of the banking business or after the closure of the banking business. So usually the cash will be kept under joint custody, one with the cashier and one with the officer, to ensure that cash is kept in the joint custody on the date of verification of the cash, because you would have gone to audit on 3rd of April or 4th of April or whatever the date, but we are certifying the balance sheet as on 31st of March. So on the date of taking cash, you take what is the cash balance, you verify, and when once you do that cash verification, you take the signature of the cashier and the officer in charge. You people also sign that on date and you take that balance, and also take the balance as on 31st of March, so that you can have that reconciliation, or you know that as on 31st March this is the balance, and as on the date of taking the physical verification of cash is the balance that you can take. Then securities, when I say, like, there may be certain checkbooks which is in there. Nowadays, most of it will not be there because it all comes from the centralized department. But even then, this tokens will be there. Like when once you go to the bank, you would have seen token number 20, they will call. So the person will give the token and they will get the cash. These tokens and all are very important. And this demand draft, TD, unused demand drafts, leaves may be there, checkbooks may be there. All these things are securities which should be in a safe custody of the bank. So ensure that based on the stock of the securities, you verify that physical verification of securities. Then gold loan. How to verify gold loan? If you go to some rural bank, sometimes we have come across gold loans of almost 500, 600, or even 1,000 gold loans in a particular bank, or 1,500. So it's not possible for us to verify 1,500 gold loans, opening all those packets and all. So what first step what we do is, we will take the gold loans. There will be a separate book or register for gold loans. We will take the gold loans as on 31st of March. What is the number of gold loans? So suppose the examples what I am giving, it is more than 1,000. Assume it is as on 31st March it was 1,252. Then we have gone for audit and we are verifying these gold loans on say suppose on 10th of April. From 31st of March to 10th of April, there will be some transactions. That is, there may be certain gold loans newly issued, or there may be certain gold loans which have been closed. After reconciliation, assume it was 1,252 on 31st March, and on 10th of April, assume it will be 1,150. So some 52 transactions would have happened, or it has been closed, or usually it will not be that much. And just for example, so 1,150, you will get the gold loans as on 10th of April. First level, what you have to do is, you have to see whether 1,150 gold loan packets or bags are there. So whenever you give a gold loan, for every account there will be a separate packet. Means either they'll put it in a plastic cover or a cloth bag, and they'll tie it, and with the numbering they'll keep it separately. So 1,150 gold loan is there on 10th of April. Like after verifying the cash, first you count this 1,150 gold packets are available. So that is 100% verification of gold packet. Say the 1,150 is there, but once you verify, assume that it will be 1,150, 160 will be there. So there is 10 extra. Then the bankers may say, sir, these gold loans have been closed, these 10 gold loans have been closed, but the party has not come to take the delivery of those gold ornaments. That is okay. But 1,150 is there, but you have only 1,100 gold packets. Then 50 is not there. Then the bank manager cannot say, sir, this has already been issued. Another 1 week or 10 days, they are coming and giving the gold jewelry. Then we will put it in a bag. So that is not acceptable. Even it is not acceptable, that is more. But in some cases, it may happen because they also believe the manager and the borrowers. So 1 or 2 days there may be delay in collecting the gold loan packets. But there cannot be an instance where you have 1,150 gold loans and you have 1,100 packets. So that if there is something, then there is something wrong in that particular system. Immediately you should record all those things and you should inform your senior. Then 1,150, assume it is correct. 1,150 bags are there, 1,150 gold loans are there that you have verified. Then you take, you select randomly or based on the values, you select maybe 5% of it or 6%, depending upon the staff you have there. Then assume that you will verify around 30 to 40 gold loans. Then you identify the gold loans and tell the banker, I want this 30 packets to be verified, physically verified. Then you take those documents of those 30 gold loans, because all these 1,150 wouldn't have been issued in the previous year. Out of this 1,150, maybe around 200 may be issued in the previous year. Other things may be a old loan. So in that 200 previous year's gold loans, you may select around 50. Get the documents, get those packets in front of the people. You just open that and see whatever is written in the document. They would have written the description of the gold ornaments that has been given. So that you can verify. And of course, if girls are verifying that, they'll be interested to see all those gold ornaments. They will get to know the various designs that are available. They can just don't handle those. Don't take it into your hand and do something else. So ask one of the what do you call this? One of the staff to come there. Let them open that. Just see and you can keep it. Then there will be that appraisal certificate will be there. He will say this is the gold. Like the percentage of gold he will write. So there are 2 bangles. He will say this is the weight and this is the gold content in this. All those things, the appraisal certificate will be there, based on which the bankers will decide about the gold loan. So you can do all these gold loans, physical verification of cash, securities, and gold loan. Sometimes bankers may say that you are not eligible, which is not correct. You have to fight for that, and you can go on verify this cash, securities, and gold loan. Nobody can stop you from verifying all this. So as a auditor, if you go, you have every right to verify cash, securities, and gold loan. But as a customer, you go, you will not be in a position to verify all this. So these things you can verify only gold loan only on which you have taken a loan against a gold ornaments. So say suppose there are certain lockers. You will say I have got a right to verify cash, gold loan. You cannot go to the locker section. There you cannot insist the bank manager to open the lockers and show me all the things that has been kept inside the locker. That is not possible and it's not permissible also. So we cannot go and see what is there inside the locker because it's not a advances that has been given. But maybe lockers are there. You can see what is the locker rental that has been taken, the locker deposit that has been taken. Those things you can verify. Then When it comes to NPA accounts, compare previous year's NPA accounts with current year to ensure all accounts have been moved to correct category as per aging. So as I said, beyond 12 months from substandard, you should go to doubtful assets. You take the last year's NPA accounts, see whether all those things are continuing current year also in the NPA accounts, or if it has been serviced, whether it has become performing, or it has not been serviced, the category has been properly mentioned. Then scrutinize SMA's report. As I said, that special mention accounts, SMA 0, 1, 2 will be there. So where you will get a report, last 2 quarters you should take, and wherever they show that there are SMA 1 and 2, you should be more careful. The last 2 quarters, take that and see that it is still last 2 quarters. If you take last quarter it was in SMA 1, this latest quarter it will be in SMA 2. Then you know that there is something wrong in that, and if it has not been classified as non-performing asset, ensure that it has been classified as NPA. Specifically wise subtotal should tally with balance sheet totals at the year end to ensure all accounts are fit into asset classification sheet. So when you go to the audit, facility wise, you take a separate advances abstract, like cash credits, what are the number of accounts, what is the total balance, like vehicle loans, what is the number of accounts, total balance, housing loan, number of accounts, total balance. So take all those things and ensure that if you do manually the totals of all these things, it will tally with the balance sheet totals, which has been classified as advances. Compare security value as of the year end with that of last year's values. So if you get that statement, you can do all these things. Ensure reversal of unrealized income. Check all the accounts that become NPA during the year. So as we have discussed, wherever what you call this non-performing assets are there, we should not recognize income. So it has to be reversed. So ensure that reversal of unrealized income has been done. So check all the accounts that became NPA during the year and ensure that unrealized income has been reversed. Check all the credits in NPA accounts to ensure that recoveries in the accounts of us appropriated to income account, that is interest account, and then will be taken to the principal amount. We have something called MOCs, that is Memorandum of Changes. Check MOCs raised by previous auditors and confirm whether the same have been effected in branch book. So in banks, what happens whenever you suggest some changes, it's done in a Memorandum of Changes. And in banks, you cannot go back and do the changes. Like when we do small businesses finalization, in Tally, we may go back before 31st, we do all those changes and we may finalize. But in companies, big companies and banks, you cannot do that. So any changes that has been suggested by the auditor, it has to be done in the next year, that is in the month of April. So last year's MOCs, if anything has been issued with the previous auditor, you take that and see that it has all those entries have been effected in the branch books. And don't get into arguments with the staff and behave cordial. So don't show that you know everything under the bank audit. Don't get into their arguments. Just have your say, have your viewpoints, and if you feel that it is getting into arguments, you can just cut down that argument, because you being articles or juniors, they may not like arguments from new people. So you can take your viewpoint, you can get their viewpoints, go and report to your seniors or your principal. And next thing is enjoy bank audit, both in terms of learning and experiencing new areas of audit. And if you get outstation audit, you enjoy that place. While you are outside or when you are inside the branch, you have to do the audit. You have to give your best efforts, because you are not auditing the bank as such. As I said, banking is the backbone of the economy. So you are contributing by doing the best audit. One thing is the integrity and professional ethics you are following. And second thing is you are auditing the economy itself, because that's the backbone of the economy, banking. So we should put our best efforts so that we will bring laurels to ourselves and also our firm, which has given us opportunity to do the bank audit, and also our institute, that is ICA, which has given us this opportunity to go and do the bank audit. And finally, we'll be helping the economy assets while doing the best audit. So these are some of the things I thought I will share with you with my little experience of over 25 years as a chartered accountant and almost 4 to 5 years as a student also. So enjoy bank audit and do well in the bank audit if you are getting an opportunity. Finally, I thank each and every one of you for giving me a patient listening. Thank you.
Sir, would you like to take some questions in case if students raise now, or is it?
Yeah, it's already 7:25. I think you can.
I know. Students, any of you guys, if you would like to pose some questions, couple of questions, sir would like to take. Else, we'll go for order. Thanks.
I think most of them are leaving already 7:30. I think you can propose the vote of them.
Yes, sir. Good evening, student friends and CA Cotha S Srinivas, sir, speaker of the day. I would like to take this opportunity to extend my vote of thanks. First of all, I would like to thank SICASA and Bangalore branch of SIRCF ICI for organizing a session of 4 days for students on bank branch audit, and especially CA BT Shetty sir and chairman, and CA Shivram Bhatt sir, chairman of SICASA Bangalore, who have planned this event especially for students, because it is CA students who would be performing bank audit majorly. So let the students be equipped with the very basics of documentation, IRAC norms, and audit planning, and then some facts about banking industry, which was brought up very nicely as a whole by our very own Kotha sir, CA Cotha S Srinivas sir. It would have definitely helped all the attendees, and it has especially helped me and my students on the same. I would personally wholeheartedly thank CA Cotha S Srinivas sir for this session.
Thank you.
And then I thank the office bearers of Bangalore SICASA for arranging this webinar on bank audit for 4 days for students. And then I would like to thank the technical team of Bangalore branch for overseeing that the session was held without any hiccups. And last but not the least, I would like to thank all the FCAs, future chartered accountants, student attendees, right, who have been patiently hearing the session and then enriching themselves with their knowledge on bank branch audit. Thank you one and all once again, and let us meet tomorrow during tomorrow's session again, with this first day of the 4 days workshop on bank branch audit for students to come, comes to an end. See you all. Happy learning.